Hello, everybody. Welcome back to another episode of the Sunday Futures Show. I am sorry I am late, but we are officially live. We've got futures opening up in futures already open and we're green. We have the overnight markets opening up in 12 minutes. And so we are going to see how stock prices, equity prices, and bond yields are performing as we start getting overnight markets and they begin trading. Futures right now are green, and it's nice to see futures are green. This was a very interesting weekend, to say the least. We've got a lot of things to talk about. I'm going to start talking about them after the overnight markets open because there's a lot of different details to get into. And if I start it right now, I'm not going to have enough time once the markets open at 8 p.m. So in about 10 minutes, we will look at the overnight markets, and then we're going to get into basically 4 to 5 different things that happened in the span of the past 24 hours, which allowed people to go to extreme euphoria to then extreme pessimism. And although futures are green right now, as you can see right here on the screen, up about 0.5% to 1% across the board. The NASDAQ right here up 1%. The S&P up 0.62, Dow Jones up 0.36, small caps up 0.2. I don't necessarily know if any of this lasts, to be honest. I mean, quite frankly, overnight markets are going to be, based on these futures, boring, because there's nothing super green or super red. Last week, if you guys remember, we were down about 4% in the futures, and that's why everything opened up down like 10%. But bond yields as well are currently up right now, which is not necessarily the best thing in the world, but at least stocks, presumably, given the futures, are not down right here. The 10-year tanking just a little, not tanking, but down a little bit right here, 4.484. This was at 4.5 about 15 minutes ago, so this one's coming down a little bit, which is good. And then we got the 30-year as well, coming down a little bit. If you've been keeping up with news over the weekend, actually 30 years up a little bit, 4.894. If you've been keeping up with news, Saturday was a big day because, well, I'll get into it in the next 10 minutes, but essentially Trump exempted a lot of things and everyone was super bullish. It was amazing. It's like, all right, we're going to gap up 5% because iPhones, laptops, semiconductors, all these things are not going to be tariffed. And then this morning, we had a bunch of headlines that says that's not exactly going to be true, which is why it is so difficult to trade this market. It is very hard to kind of see what is true, what is not true. And yeah, I'm not exactly sure what's going to happen tomorrow. I think there's going to be a flurry of new headlines tomorrow from the administration to try to clarify their stance because no one really knows exactly what their stance is. And I've got a lot of theories on what happened over the weekend, so we'll be discussing all of them in the next 10 minutes. But yeah, we had our boy Lutnick come on TV today, and he definitely, he definitely set the record straight, which did not make everyone that excited. So we'll be taking a look at everything going on. Thank everybody for being here. Hello. Hopefully everyone had a good weekend. June, what's up? Adam, what's up? Uzi, JC, ET, what's up? Gerald, Gene, Chana, Osama, Jason, what's up? I'm Beneficial, Midwest, Krishna. Thank you all for being here today. Hopefully everyone had a good weekend. What did I do yesterday? I went to the Apple store. I had a $100 Apple gift card. So I finally got one of these things, which should help my phone when it comes to charging. I got one of these MagSafe things. I got an AirTag as well for my wallet. It was a $100 gift card. So I was like, what can I buy? There's nothing really in the Apple store that's $100. Everything's a lot more expensive than that. But this was like $40. The AirTag was $30. So where do you guys think I put the AirTag in? Where do you think I put the AirTag? What do you guys think I lose the most? I said this last week, if you guys remember. But yeah, I had to put an AirTag somewhere because I was losing a lot of stuff. Rockefeller says, I love you, Mitt. Rockefeller, thank you for being here. Love you as well. Wallet, yep, you got it. Wallet. Stuart got it, my wallet. Dude, I lose that thing like twice a day. I don't even know where it is right now. But I got an AirTag in it, so hopefully that helps. Spencer says you're dildo. That is so funny. Okay, Toronto. We're doing the meetup. It's happening. Here's the form. It is in the chat. I did not post this on Twitter yet, so I'm posting it right here. Toronto. I'm going to pin this comment. Toronto meetup form. So for those that want to come through, that is the link. Again, futures opening up in 7 minutes. We're going to get through all the headlines after the overnight markets open up, just because there's a lot to talk about, and I want to make sure we have time to get through all of it. I'll pin this right here. And yeah, we're doing it. April 25th. I'll be there April 24th. So I will be there probably, yeah, I'll be there night. I'll be there. I'm gonna take a flight after the market close on Thursday, April 24th. I'll be there all day Friday, Saturday. Oh, so it's Saturday the 26th, most likely is the meetup. And then I'll take a red eye Saturday night. So we'll be there for about 2.5 days, and it should be fun, exciting. And yeah, if anyone wants to sign up, you can sign up there. The actual Telegram group and all that stuff, it'll come later in the week. But if you want to sign up, that's the form that you have to sign up. I put the AirTag in my wallet. Guess where I put it? Did I actually say that? Oh my gosh. I bought an AirTag. You started off with I bought an AirTag for my wallet, and then I asked you guys, what do you think I bought the AirTag for? That's well, I'm getting older, bro. My memory is bad now. I guess that's what's happening. Is Tanner coming? So I've talked to Tanner. He should be coming. I don't know if he's officially free that weekend, but I talked to him a week ago, and he said he should be good. So yeah, I'm excited. If you're from Toronto, feel free to DM me. I'm still trying to figure out the exact location where there should be, the exact place. I'm obviously not familiar with the area, but I've been doing some research on it. But if you know about like a club or I'm thinking of just like when we did it in Palo Alto and NYC, there was just a bar that people could just chill at for like 6-7 hours, and people didn't really care. It was just like a cool vibe. So I'm thinking of something like that, but open to new ideas and suggestions and things like that. An AirTag, for those that don't know, is this Apple product that allows you to track a product or like a suitcase or something if you put the AirTag in it. So yeah, I decided to put it in my wallet because I lose it every day. Tim Hortons, bro, Tim Hortons would be well, I've definitely got to try Tim Hortons, that's for sure, but I feel like it would be kind of lame if we did a meetup. And maybe it's not too lame if we did. The thing is, I'll be there for 2.5 days, so I feel like the main meetup will be on Saturday, but maybe there's some other preliminary things we can do even outside of the meetup. All right, we got 5 minutes until the overnight markets open. Again, a lot of different things happened throughout the past 24 hours that we'll be discussing. This is how Friday ended, just for people to get a little bit of a reminder. Very green. This was the S&P 500 for the week. It was up 5.7%. It was its best week since November 2023, which is kind of crazy, right? With all the crazy stuff we had to deal with last week. Last week was the week where we gapped down 5%, then went up 10% intraday off of Trump saying it's a great day to buy and then initiating the 90-day pause. Then we fell 5% the next day. And then on Friday, we recovered about 3 or 4%. And we ended out the week up about 5.7%. We saw a negative 3% to 10% reversal on the S&P within a few hours of 2 days on Wednesday, which is just, again, insane. But overall, just an incredible week to live through, and feels like this week is not going to be that different. It was a messy weekend. Yes, it was a very, very messy weekend. Lots of headlines going back and forth. We do have some good updates, though. Like, there is some positive news in terms of what's going on. Obviously, futures are green right now, based on a perception of something positive that is indeed positive. It's not as positive as we wanted it to be, but it's positive. And so that's why futures are green, but it's nothing special. Most people, if you asked them last night, expected futures to be up almost 4 to 5%. That's not happening now. And we'll talk about why that's not happening, but that rally that people thought we would get, including myself, just given how bullish the news was on Saturday, has changed on Sunday. I did listen to the Iced Coffee Hour. I did listen to Camilo. I was driving yesterday, and I listened to his take on Hood. He's really convicted on Hood, dude. That's the number one stock he's buying right now. That's the number one stock he's buying right now in the midst of all this volatility. And it's hard to disagree, dude. I was talking to a couple of friends over the weekend. I came up with this concept of, there's a blue pill and red pill. There's a Hood pill. And I think once you take the Hood pill, it's hard to look at any other fintech the same. So to me, I think you're either Hood pilled or not. And one of my boys is really heavy SoFi. I'm like, you obviously haven't taken the Hood pill yet. But like when you take the Hood pill, it's just like you look at all the other fintechs, not saying they're bad. They're just not Hood. And to me, the Hood pill is just understanding the level of innovation in that company. And why I think it's going to drive them to a multi-$100 billion company in the future. So yeah, Camilo is definitely Hood pilled to a strong extent. And he's been buying it heavily in the midst of all this volatility. TLT could be green this week. Yeah, well, I don't know. I mean, I think TLT could be green. We got the market overnight opens in about 2 minutes. I think yields are topping, so I feel like TLT is going to be a good trade. I did get it into that on Friday For those that don't know, for those that don't know what I did with the covered calls too, Robinhood 42 to 47 for next week, this Friday. So rolled that over. And then NVIDIA 110 to 119. I rolled those calls. So maybe those are in jeopardy this week. Maybe they're not. But I rolled them literally right before they took off. So I was still able to roll for a net credit. And what I bought was TLT because it felt like yields were topping. And it looked like an amazing trade yesterday as of the headlines we got this morning that we'll talk about in about 5 minutes. I don't know if it's going to be the best trade, but they're $100 calls for January 2026. So I think they have enough time to play out because I think yields inevitably have to come down like at some point. I would imagine if that's the case, I think TLT gets closer to that 100, 115 level if we get the 10-year to 3.5, which I know it seems like a stretch right now, but towards the end of the year, I think that is a shot to play out. Oh yeah, we're closed Friday. That's correct. We are closed Friday this week. So this will be a shorter week for 4 days. Wow, I get a day off on Friday. That's crazy, dude. In this industry, you don't get days off, dude. I'm probably going to go live anyway, but that's wild. All right, here we go. In about 30 seconds, we will get overnight markets opening. I think everything's going to be pretty green. I don't think there's going to be anything too crazy. We were decently green to end out Friday, and I would imagine we're up probably 0.5% across the board, maybe some stocks 2, 3, 4%. But tomorrow is going to be the real test when these headlines actually deal with the deep liquidity of global markets opening up. And we'll talk more about them throughout the rest of the hour to see if that'll be bullish or bearish. All right, here we go. Sunday, April 13th, 8 p.m. Overnight markets are now open. Wow, NVIDIA, 2% overnight, baby. S&P, 1% overnight. That makes sense. S&P 538, that's basically what the futures are showing. Robinhood up about 1%, $44 on hoodie. TLT's down a little bit overnight. That's because yields are still up. We'll talk more about that in a bit, but makes sense that TLT is red. Tesla's up 2%. Webull, by the way, went public. No one even knew it went public, but it went public. That went up like 100% after hours on Friday. I think that's very memeish right now, but that one's green. SoFi's up 2% after hours. Rocket Lab is flat. Oh, Rocket Lab is overnight trading now. Cool. Is it on Robinhood? Let's see if Rocket Lab, that one was not overnight for the longest. Let's see on Robinhood if it's overnight. Rocket Lab. No. So only on Webull it's overnight, not on Rocket Lab yet. MicroStrategy is up about 0.84%. Bitcoin right here, 83.7. We were at 86 yesterday. Again, there were some really bullish headlines yesterday that got everything pumping, including Bitcoin. And then Mr. Lutnick took all that away from us today. So Bitcoin is basically flat right now. NASDAQ's up a little bit. Dow Jones up a little bit. Apple, wow, 4.5% overnight. So Apple's still pumping, even with some of the volatility this morning. Saturday news was good enough. Apple now well over $200, 206.8. That's up 4.3%. There were a lot of calls opened on Apple before the 4% pump on Friday. Someone always knows, but Apple right here getting some momentum. Palantir up 1.07%. That is green. Intel's green. Mercado Libre is green. Nubank's green. Google is green. Silver green just a little bit. PayPal's up about 0.5%. Baba's up 1.2%. Lululemon's up a little bit. Oklow's up. Meta's up 1%. Nike's up 0.2%. Micron's up 5%. Snapchat's up a little bit. Microsoft, Uber, pretty much everything's green. Nothing crazy like 2, 3, 4, 5%, but I would say 0.2 to 1% average across the board. S&P 500 right here up 0.8%. NVIDIA though, well, NVIDIA, this makes sense. NVIDIA, the semiconductors are excluded from a decent chunk of tariffs. That was the headline over the weekend, so that's why NVIDIA is probably pumping right here. 114 on NVIDIA. Where's SMCI? SoFi is up about 3% as well. SMCI 4.7%. Moving with NVIDIA, and then AMD is up 3.85%. Okay, cool. So semis are pumping. Hood's basically flat. Tesla's up 2. S&P's up 0.76. Let me check the 10-year and 30. 10-year continues to go down, which is nice, and 30-year slightly green, but it's down from where it was at 6 p.m. So we do actually have some good parts moving together. Stocks are going up while yields are going down. I know it's only overnight. Tomorrow is going to, we're really going to see if this can continue the trend, but at least it's not the disaster that we had last week when everything was down 5%. I mean, if that was peak fear, then maybe we bottomed. I mean, for us to revisit those bottoms again, we would have to fall basically 8%, which, I mean, yeah, it could happen. It's just like, it feels aggressive given some of the momentum that we got over the weekend, but obviously it could happen right here. Yeah, Apple's a big one right here. Oh, Apple's 8% now? Really? Apple? My goodness, 8%. Yeah, I mean, so the big headline here, and again, we'll get into it, but iPhones and laptops are excluded from the reciprocal tariffs. Now, they're still going to be tariffed, but they're not going to be tariffed at 150%, which is probably why this thing is surging green right now, which makes sense. I mean, like the reason it went down to 168 was because people thought Apple would have to pay 150% on every iPhone and laptop and AirTag that they sell. But that's not happening anymore. It's probably still going to be like 20% based on what we know. But yeah, as of right now, that's what we got. Where's Hims right here as well? Let's take a look at Hims. Hims is up 1.76%. All right, so we're green across the board. Now Robinhood's moving up 2%. NVIDIA, wow, 4.2. 115 on NVIDIA. S&P's up 1%. Tesla's up 2. Morgan Stanley's up 2. Palantir's up 2. You're getting some decent momentum here. Apple really leading the way. And overall futures up about 1% in a lot of these different areas. Okay, cool. So let's get into why this is happening. Let's get into why all this is happening. It'll explain what's going on with Apple, what's going on with the semis right here. Micron's up 6%. And it'll also explain what's going on with the overall indices right here. AMD is up 4%, 97 right now. NVIDIA and Apple leading the way. NVIDIA 4.35%. Not too bad right here for NVIDIA. All right, so let's talk about what happened, because this was a pretty incredible weekend across the board. We had lots of different things kind of playing out in terms of different competing narratives, and we got more clarity today, if you want to call it that. So let's start off. This is what I woke up to on Saturday. Yes, Palantir above 90, and then Robinhood as well, almost touching 45. I woke up to this, and I tweeted this at 12:30. I woke up at probably 12:32, so slept in on Saturday. But this is what I woke up to. The White House has published a list of products that will be exempted underneath their tariff policy. These were the products: computers, laptops, and desktops, smartphones, and semiconductor manufacturing equipment. Now, this was not fake news. There was an official release by the White House detailing these things. This was not fake news. This was not some Bloomberg reporter got it wrong. There was like a literal link. I'll put it in the chat in a bit where you can click on it, and it shows you exactly all of the specific ID codes for these different products. And when you look at all these products, these are the ones that are exempted underneath their policy. So this is why people thought, holy crap, everything is going to be okay. Trump finally folded. He realized that he doesn't have the leverage that he thought he had, and he excluded all the main stuff that's important that we don't need, right? So this is like bullish, right? Laptops, NVIDIA, iPhones, all that stuff about manufacturing in the United States, that's gone. That whole narrative was gone. That's what we thought on Saturday. And then on Sunday this morning, this is what our boy Lutnick said.
So you're saying that the big tariffs on things like smartphones and laptops, iPhones, all those iPhones built in China, that those tariffs are temporarily off, but they're going to be coming right back on in another form in a month or so? Or what are you saying?
Correct. That's right. That's right. Semiconductors and pharmaceuticals will have a tariff model in order to encourage them to reshore, to be built in America. We need our medicines and we need semiconductors and our electronics to be built in America. We can't be beholden and rely upon foreign countries for fundamental things that we need. We can't be relying on China for fundamental things that we need. Our medicines and our semiconductors need to be built in America. Donald Trump is on it. He's calling that out. So you should understand these are included in the semiconductor tariffs that are coming, and the pharmaceuticals are coming. Those two areas are coming in the next month or two. So this is not like a permanent sort of exemption. He's just clarifying that these are not available to be negotiated away by countries. These are things that are national security that we need to be made in America.
The president's...
Now, I woke up to this at like 11 a.m. today, and obviously this was not good to hear, because everything that people thought was going to be taken away in terms of the tariff exemptions, semiconductors, laptops, etc., Lutnick is saying, no, actually, those are going to be tariffed. Those are just not going to be tariffed in a reciprocal way. And that was doubled down. That statement was kind of quadrupled down by Trump right here when he tweeted the following. Okay, so this is what he said about basically 3 hours ago. He says nobody is getting off the hook for the unfair trade balances and non-monetary tariff barriers that other countries have used against us, especially not China, which by far treats us the worst. We'll talk more about China in a bit. There was no tariff exception announced on Friday. Now, this is a very important wording of how Trump frames it, and we'll get more clarity on it in a second. But notice he says, hey, if you guys all thought like I was going to take out laptops and iPhones and blah, blah, blah. No, I never said that. There was no tariff exemption. These products, aka laptops, iPhones, semis, etc., are subject to the existing 20% fentanyl tariffs, and they are just moving to a different tariff bucket. If you're confused, don't worry. Everybody's confused. The fake news knows this, but refuses to report it. I think that he doesn't get to use the fake news argument right there. We are taking a look at semiconductors and the whole electronic supply chain in the upcoming national security tariff investigations. What has been exposed is that we need to make products in the United States and that we will not be held hostage by other countries, especially hostile trading nations like China. The golden age of America, which includes the upcoming tax and regulation cuts, a substantial amount of which has just been approved by the House and Senate, will mean more and better paying jobs, making products in our nation and treating other countries, in particular China, the same way they have treated us. So basically, he's saying, hey, all those exemptions you guys thought you were going to get, that's not happening. So what's going on here? At one point, we get this real list, I just put it in the chat right there, around all these different exemptions. And then you got Lutnick and Trump, and then we'll look at Navarro in a second, come out and say, no, there is no exemptions. Nothing is exempt from the tariffs. All these tariffs are still going to apply, which is why I think futures are not up closer to 4 to 5% right now, because it's kind of been subdued by the administration. Well, here's the best kind of investigative journalism I found on this, not from mainstream media, but from some independent media on X, on what they think is going on. And this is what I think is also happening as well. The White House published a note titled Clarification of Exceptions under Executive Order 14275 on April 11th, 2 days ago. On April 12th, that's when everyone got super excited. It's Saturday because we found all these exemptions, because they literally published a note called Clarifications of Exceptions. Certain goods were apparently never supposed to be subject to the reciprocal tariffs announced on April 2nd. Now, this is the most important thing, because on April 2nd, when Trump announced these like ridiculous tariffs on every single country, everyone thought, holy crap, all the goods that we care about, laptops, iPhones, etc., they're going to be subject to these insane tariffs. Apparently, the administration never told us, either from a communication perspective or in the legal enforcement of the tariffs themselves, that certain products were never supposed to be included in the reciprocal tariffs. Most media outlets thought the April 11th clarification, which came out 2 days ago, posted by the White House, was a new list of exemptions, but rather these weren't new exemptions. So Trump is technically correct when he says there were no exceptions made on Friday. He's correct about that. But what he's not telling you is that the administration did a very poor job at communicating the types of products that were not supposed to be included in the first place, which are the laptops, iPhones, etc. So these goods were never actually intended to be subject to the 145% tariffs on China, which is bullish. That's why stocks are green right now. That's why Apple's surging right now, because it was not supposed to be subject to 145%. Like the reason Apple fell to 168. And I really am curious if there's any people close to the administration that bought that dip. I have a feeling they did. And they knew that Apple was never actually going to be included. A week later, now the administration comes out and says, hey, Apple's not actually included because we're not saying that iPhones have to be part of this reciprocal tariff. We think that there will be a tariff on iPhones. That's what Lutnick said today. It will just be in a different, quote unquote, bucket of tariffs, right? And that is why Apple's up right now. This also explains why refunds will be dated back to April 5th on these goods, essentially classifying this as an enforcement error, not a policy reversal. That was another thing that happened over the weekend. The White House said we will be retroactively refunding the tariffs we collected going back to April 5th. And everyone was like, what? You're refunding the tariffs that you got on April 5th? Why? And apparently it's because they were never supposed to collect those tariffs, aka 145% tariffs on Samsung laptops, because those laptops were always supposed to get their own bucket of tariffs, which is what Lutnick clarified today. Same with Trump, versus getting the reciprocal tariffs from the April 2nd list of tariffs that he put out. NVIDIA right here up about 4%. Apple's up 7%. AMD's up 4%. HIMS is up 2%. And then Robinhood right here is up 2.24%. So everything's green right now, including the S&P 500 up about 1% in the overnight markets, because now the market has a little bit more clarity about what was supposed to be included and what was not supposed to be included. And essentially the takeaway for everyone is that the products that we all care about, NVIDIA chips, Apple iPhones, Microsoft laptops, etc., all that stuff that's manufactured across the world, they will get their own tariff in the future. We don't know what those tariffs are, but they're not going to get reciprocal tariffs, which is good. And that's why markets are up right now. But the level of confusion that it has created over the past couple of days has obviously been incredibly volatile, and it is let the bond market. I mean, the bond market told Trump how volatile it was, but the overarching reciprocal tariffs are not applicable to a lot of these goods. Now, what's funny about this is that none of this would have mattered, right? Like on April 2nd, if they said, "Hey, iPhones are excluded from the reciprocal tariffs," which I think there's a hunch in me saying purposely they didn't say that because they wanted to create all this chaos and they wanted to like put the pressure on Apple. But now that they're clarifying it, like most of the tech stocks wouldn't have reacted as badly as they did. Like, I don't think Apple would have gone to 168 if everyone knew, oh, Apple's not going to be paying 145% reciprocal tariffs. They're only going to be paying maybe 10%, 20%. Like, the market could handle that. The market could not fathom 145%. Same thing with Walmart. Same thing with Amazon, right? All these companies affected by China because a lot of their goods come from China. Let's look at Walmart right now. Overnight, Walmart, yeah, that's up another 0.5%. And then Amazon, I think, is up 2%. Amazon up 1% right here. 186 on Amazon. Apple, the one really winning, up 6.24% right now. Mr. B says they're not clarifying. They're backpedaling clearly. Yeah, there could be an argument as well. I mean, we'll talk more about what the negotiation of this all looks like. But one can make an argument that they're clarifying. Someone else can make the argument that there's no clarification because they are realizing how much they screwed up by thinking that the stock market and more importantly the bond market would be okay with Apple having to pay 150% tariffs on iPhones. Like, even if you don't own Apple stock or care about Apple as a company, like that really matters to the global supply chain, the global economy. Apple's 7% of the S&P 500. Like, you just can't have a company having that type of burden on it. And maybe they realized over the weekend, hey, like, we should say we're making an exemption when in reality we're just taking back some of the stuff, just like the 90-day pause was to give countries more time to negotiate, when in reality yields were rising and the Trump administration probably realized, yeah, we need to calm down the bond market, and that's where that 90-day pause came in. Maybe the same thing is happening right here. Regardless of all of that, everyone else gets to enjoy stocks that are a bit more green in the overnight markets, which is nice to see. Do I trust it? Not really, because I don't know what the hell is going to be announced tomorrow in regards to a variety of different headlines that we're looking at. But at least it's a little bit of a continuation from what we got on Friday. And if all goes good this week, maybe they announce a deal with Vietnam and Thailand and China. And I mean, I don't think China's coming this week, but if they announce a ton of different deals, that could also be momentum. That could get yields to come down as well, which is really important. But as of now, that is the latest update on what products are included or excluded and how the administration has communicated what is going on in the context of tariffs. So we're green. We are green currently right now. ARM is up about 2.7%. Again, pretty much everything's pumping. Again, low volume as well. They're pumping based on the futures. All the semis are pumping as well. Micron's up about 7%. ARM, Marvell, 3%. The semis are really pumping because of NVIDIA leading the way, which is nice to see. SMCI up 5%. Intel's up 3%. But we do have some other things we have to talk about that could affect these going into tomorrow. Now, look, here's the good thing. Dell right here is up 11%. Last week was pretty epic for the S&P 500 in the midst of all the volatility. If we can have a week that's even half of what we had last week or 1/4 of what we had last week, we're going to get pretty close to that 200-day moving average. It's not going to be easy to get there, that 572 level on the S&P, but is there a shot we reclaim it? Yeah, I'm not expecting that at all. But we would have to get a series of good announcements and a lot more clarity coming from the administration, which based on what happened last week, I don't expect. But if it does happen, that wouldn't be the worst thing in the world to see if this plays out. Yeah, Apple is very green. And then Robinhood right here up 2.34%. Micron, a big winner right now, up about 7.2%. Where's Bitcoin? Bitcoin's still down. It's up though. It was up from up from 83. Still down on the day, but yeah, we do have some green candles right there. 83.4 to 84.3. That's nice. About $1,000 green candle. Rocket Lab as well, up about 0.5%. MicroStrategy up 4%. Saylor's probably buying more Bitcoin because he tweeted that chart that he tweets every Sunday night. So you should expect a purchase from him that I'll talk about on the market open tomorrow. And then you got the S&P 500 right here up 0.86%. The Qs are up 1.37%. NASDAQ up 1%. S&P 500 up 1% as well. Okay, cool. So that was the big thing that happened over the weekend. We had this big announcement of exemptions. Then Trump came out today and said, we don't actually have exemptions. But if you really look under the hood, there were never supposed to be exceptions. And either the administration is clarifying that or they're backpedaling, whatever they're doing. The market likes it because we finally know that Apple and NVIDIA are not going to have to pay some insane 150% tariff in China, which is very important. Now, there was another headline that came out this morning. I haven't confirmed it. It's from the New York Times. Some other outlets have said that this is true, but I think we'll get more clarity on it, which, and this headline, if it is true, not sure why futures are as green as they are. Potentially the implications of it aren't that bad, but maybe the headline also isn't that true. China has suspended exports of a wide range of critical minerals and magnets, threatening to choke off suppliers of components central to automakers, aerospace manufacturers, semiconductor companies, and military contractors across the world. Shipments of the magnets essential for assembling everything from cars to drones to robots and missiles have been halted at many Chinese ports while the Chinese government drafts a new regulatory system. Once in place, these new systems could permanently prevent supplies from reaching certain companies, including American military contractors. The official crackdown is part of China's retaliation for President Trump's sharp increase in tariffs that started on April 2nd. On Friday, China said, we're going to now tariff you guys 145%. So they've kind of doubled down on their tariffs against the United States, or sorry, 125%, even though the United States is doing 145%. And today it's being reported that China's suspending the export of critical rare earth minerals. Now, again, this is not good. This is not good if this is true. And it's not just the New York Times. There's a lot of other, like the Japanese Times, Reuters. There's a lot of different outlets reporting it. I'm trying to get some official indications from China or the Chinese embassy that this is indeed true. The market's kind of acting like it's not true, though. And if it was true, I feel like this is not a good thing. Like, we kind of need the critical rare earth minerals, especially magnets, for a variety of different things. And granted, I think we're going to get a deal done with China. So the market could also be thinking, okay, it's true, but it's a negotiation tactic from the Chinese. They're not literally saying we're never going to export this stuff to you. They're just like doing something to like get Trump's attention, and eventually they're going to have a conversation. So I think that could also be an argument that the market's overlooking it because they know inevitably it's going to get resolved. But it shows that retaliation around these different dynamics between China and the United States. The United States last week said, hey, we might ban Chinese stocks from U.S. stock exchanges like Alibaba, NIO, etc. It's tit for tat at this point. They're going back and forth. They are completely going back and forth. Pretty wild flip-flops. I've never seen policy flips like this in 35 years of trading. It has been quite incredible. I mean, and you're not alone. Pretty much everyone is just looking at what's happening, and they're like, I can't believe this is like every single day. It's like whiplashed up and down in a different direction. But this is the nature of the markets. And, you know, if we get some really, really, really good trade deals out of it, then yeah, that'll be like, I guess, worth it for the next whatever, how many years if this plays out the right way. But from my understanding, I mean, I don't know. We're going to have to see if the deals come in, because right now this seems like the administration is just governing by vibes more than anything. I don't think they really have a plan. I do think like they have leverage, and I do think they've negotiated in a way that's getting people to come talk to them. But a lot of this stuff is going back and forth. And so I think eventually this gets solved. Like, I think Trump doesn't want to cause a crazy economic recession. I don't think he wants yields exploding. I don't think he wants the Feds pumping money into, he wants the Feds to cut. I don't think he wants them to do a ton of quantitative easing, because that means something is breaking, and that would be on his watch. So I think he's going to figure it out some way, which is why I'm bullish. I'm not selling anything. But if you don't think he's going to figure it out, then you sell everything because you think we're getting into a Great Depression. I don't think that's happening, but it is a crazy journey to kind of see how all of this is currently playing out. And you can't really say tomorrow's going to be green, right? Like, it looks great right now, but like, does it, like, even Monday, we had a reversal last week after we fell 4%, and then it went up Tuesday, then it went right back down. So I don't think it's safe to say that just because overnight markets are green or futures are green, Monday will be the same, especially because you might get another set of headlines next week that change the whole dynamic. But it has been absolutely insane every single day, basically for the past week. And we're seeing that playing out in the overnight markets right now. Where is NVIDIA? NVIDIA right here, up about 3.59%. So giving back a little bit of those gains, but they were green to the tune of about 4.5%. Are you not entertained? That is correct. Are you not entertained? It is just a different level of volatility that we are experiencing here right now. Now, here's another thing that is important to understand right here. So this is also from Fox News. Don't know if it's true or not. We talked about the China stuff, but here's what we got from Fox. Okay, so One of their business reporters is saying there is significant division in the White House over Howard Lutnick's comments on the temporary nature of the tariff exemptions, an apparent 180 from where the world thought trade negotiations were going, sources tell me. Of course, the only opinion that really matters is the president's, but I'm told plenty of people really believe he is off message, off trying to create a trade regime that involves negotiations even with China and actions that don't roil the markets, including the all-important bond market. So the scoop here is kind of that Lutnick was not supposed to say what he said this morning in the media. Lutnick was supposed to essentially allow the market to be excited about these exemptions, but he didn't because it was kind of off message. So here's another tweet from that Fox reporter. He said, a senior Wall Street executive with ties to the Trump White House described Howard Lutnick's comments about the temporary nature of the tariff exemptions as off message. Now the market will open way down again since it appears that the administration is totally confused. Obviously, the market's currently green right now, so they're not as confused. But they're probably not as confused because Trump came out and put out that long tweet about nobody's getting off the hook. Now, some people are saying the only reason that Trump actually put out this super big tweet about no one is off the hook is to make up for the off-message remarks that Lutnick had this morning, because Lutnick was supposed to say, hey, yeah, we're doing these exemptions because we think it's good for these industries. But Lutnick doubled down and said, actually, no, we're going to put a tariff on the iPhones, just not a reciprocal tariff. And again, these are what sources are saying to Fox. Trump got pissed off about that, but he needed to show alignment. And in order to show alignment, he agreed with Lutnick essentially by saying, hey, yeah, no one's going to get exempt from any of these tariffs. It is insane. It is absolutely insane. You got a lot of conflicting narratives in every different angle. Bitcoin right here, trying to get to 85,000. We did touch 85 for a second, right there at 84.8 right now. But that's currently what's going on in the White House. So that means buy because it's a double negative canceling each other out. Yeah, maybe. It's I don't know. I don't know what the answer is. Or did Trump instruct Lutnick to say exactly what he said in the morning? Right? And are these sources wrong that there's this pseudo division between Lutnick and the Trump White House? Or is Trump saying, no, I love what Lutnick said, and he's doubling down not out of a fear of an incongruent message, but rather a support of the underlying argument that Lutnick put out in the morning? No one knows. No one freaking knows. And I think that's what's also been so vital to create all this volatility, is just there's no certainty around any of the headlines that we're getting right now. 114.91 on NVIDIA. S&P fading a little bit of its gains. It was up 1%. Now it's up 0.7. Apple was up about 7.2. Now it's up 6.2. It looks like we're going to be green for a while. Doesn't look like anything's fading dramatically, but some of these stocks down just a little bit from where they were. Same thing with Bitcoin. SoFi right here above 11.13 currently right now. Robinhood up 2.34, 44.70. Along with the rest of the market, basically up about 1 to 2% on average. Maybe the goal is uncertainty. I would have agreed with that a month ago, because my thesis would have been, the goal is uncertainty to crash the stock market, or at least create volatility in the stock market to then get people to flee to bonds. But that's not working. It's really not working. This whole idea of let's make everything super volatile so that people buy bonds and that gets yields to come down, which is great because we can refinance our debt, yada, yada. I mean, that theory, 10-year right here, 4.47, it hasn't worked. We've lost $10 trillion in the stock market, and yields have barely budged. I mean, it went from 4.8 to 4.5, but outside of that, they're thinking of getting yields down to 3.5 or 3.8. We're not anywhere close to that level. 30-year right here is up a little bit right now. So if the goal is uncertainty to get a desired outcome, whatever that outcome is not necessarily happening as easily, unless the goal is to create uncertainty to get a ton of trade deals done, which maybe, but we don't know if those deals are fully set in place. Maybe we'll find out over the next week. I have an idea. No more Lutnick interviews. Yeah, I mean, see, but here's my thing. Either Lutnick's going off the rails and he's eventually going to be the scapegoat when all this fails and Trump's going to blame him, or he's doing exactly what Trump wants him to do. We really don't know yet. And I think we'll get more reports in the coming weeks. We obviously know what Elon's stance is around people like Navarro, who he does not really respect, but we're not necessarily sure in the context of Lutnick. Now, here's a couple of clips of Navarro. He was on TV this morning, and here's some of the stuff he had to say about the strategy that POTUS is deploying.
So this is unfolding exactly like we thought it would in a dominant scenario. What's going on here is you start with the observation. I don't think you would disagree with me at all. The world cheats us. They've been cheating us for decades. They cheat us with tariffs, higher tariffs. But more importantly, they cheat us with the so-called non-tariff barriers. It's the VAT taxes, the dumping, the currency manipulation, the technical barriers that keep our autos out of Japan, the agricultural barriers that keep our pork out of Australia or Europe. They're doing that to the tune of $1.2 trillion of wealth a year that we transfer now abroad, and $18 trillion of wealth since we started running deficits. You know how much $18 trillion of America that could buy? So that's the problem we're grappling with. So we have a strategy here where the president says we're going to charge them what they charge us. And the analytical issue is it's easy to calculate the tariff differential, but the non-tariff barriers are so much higher. So that's what we set, knowing full well that a lot of countries would come right to us and want to bargain.
So, according to Navarro, everything's going the way it needs to go. Here's what he said about Elon Musk.
So, first of all, Elon and I are great. It's not an issue.
Even though he called you a moron and dumber than a sack of bricks?
I've been called worse. Everything's fine with Elon. And look, Elon's doing
that. Like, I mean, there's this like tension here. Because like you guys are both politically influential to the White House. Elon was with Trump at the Air Force One at the UFC fight night yesterday. So it's like obviously both of you are pretty close. He trusts both of you, and he's just shaking off the comments. It's like, yeah, I've been called worse, which is interesting. I wonder if there's more to this, or if it's kind of just like not as big of a deal as people are thinking it is.
A very good job with his team with waste, fraud, and abuse. That's a tremendous contribution to America, and no man doing that kind of thing should be subject to having his cars firebombed by crazies. I mean, that is like
broad agreement there.
So nobody should have to come into this government and have that happen or have to go to jail like I did.
So Navarro basically saying, hey, it's okay. It's okay that Elon called me an idiot, which again, I think there's more to that than just brushing it off. Like, it's not just one of your friends saying like a joke about you in passing. Like, he's like, Elon, in my opinion, instructed Kimball Musk to put out some pretty mean tweets about Navarro. And then he kind of doubled down and reinforced those mean tweets by literally calling him retardo. I mean, like at some level, there is a little bit of, I would say, division there. The question is who Trump is listening to in the context of this tariff policy. Gene says he took the high road. I think he took the high road, but I think that was the only road he could take because he can't go back at Elon. I mean, Elon was with Trump at the UFC event yesterday, like they're best buds, right? It's like, if it comes down to Elon and Navarro, I think Trump makes like if it really gun to his head, I think Trump picks Elon pretty easily. So I think Navarro has to kind of adapt to it. As long as he has some influence, he's probably happy in terms of what's going on with the Trump administration. Stocks green still overnight, nothing crazy. Tesla pumping a little bit, 2.4 right here. SoFi up 3.6. The Q's up 1.2. Nvidia's up 3.6. S&P up 0.7. Looks like this futures move to the upside is not getting faded yet. And the market's okay with a little bit more certainty that we got over the weekend. Now, Elon did retweet a clip of Lutnick. This is the clip that he retweeted. So maybe he's in agreement to an extent with what Lutnick's saying, even if he's not in agreement with what Navarro's saying. Here's the tweet that he retweeted about a couple hours ago.
The president also said there's going to be a transition cost, transition problems. I mean, we are going to see higher prices in America as well. It's not like you can open a factory tomorrow to build iPhones or to make sneakers, shoes. I mean, we buy a lot of shoes in this country. 99% of them are made elsewhere. I mean, are we going to become a nation of cobblers again? I mean, this is going to mean higher prices, isn't it?
I mean, have you seen, I don't necessarily think so. I think the idea is that we can manufacture here in America. As I said, I saw Panasonic, the battery company, right? Japanese company. They built an amazing factory in Kansas, which they're opening now. They put it in the ground when Donald Trump was the president. It's just finishing now. 4,000 new jobs built from what they made deals with the community colleges nearby and all the local community and the local university. They trained people for this. 4,000 high-tech jobs in Kansas. That is what's coming back to America. You're going to see that production, that that kind of high-tech factory is going to produce things here at very reasonable prices. So I think this is going to work out. Plus, our farmers are going to finally have access to the world's markets. You know, our farmers have never had the opportunity to sell corn in India. So what's going to happen is as they sell more and more products, prices will come down.
I mean, Mr.
More
Secretary,
it's lower prices. You're going to see lower prices in America on lots of different products.
Mr. I mean, right now we're seeing them effectively being locked out of a very large market, especially people like soybean farmers in China. But
so, I mean, look, Elon retweeted that clip. I mean, maybe Elon agrees with that to an extent. I think you have Elon's perspectives, you have Trump's perspectives, you have Lutnick's perspectives, you have Navarro, you have Basent, who's thinking about the bond market and treasury yields. I mean, like, you got a lot of different moving parts in every single area. And for anyone wondering why is the market green, the market is green because the core products that we all care about, laptops, iPhones, GPUs, etc., those are not going to be tariffed at reciprocal rates. That was clarified by the administration today. But what they did say, which is why I don't think we're up like 5%, we're only up 1%, is that there will be a new bucket of tariffs on those products eventually. We don't know when. Maybe it'll be announced this week. And that could be a downside catalyst for some of these names. And so Apple will have to pay some tariffs on their iPhones. It's just not 145%. That's why Apple's pumping right now. That's why the market's pumping. But I mean, we don't have all the data currently on exactly what the new tariffs will be. Apple right there up about 6.94%. In the pre-markets. Maybe they'd never announce what the reciprocal quote unquote bucket of tariffs would be for GPUs and iPhones. I mean, maybe I'm just dreaming about that, but like if they never announce it, if it's kind of like indefinitely, like they're going to eventually announce it, maybe the market, can continue to move forward with some of those names. But more likely than not, based on the Trump tweet we got this morning, we will get some clarifications on the new buckets of tariffs. And I can't see how the market's going to take that positively. Unless it's super priced in, right? Like if they announce 20% flat tariff rates on like iPhones, I guess the market has priced that in because it's not as bad as 145%. But on a Wednesday morning, if Trump tweets that out, like is that going to be good for Apple? I don't know. So it's really hard to trade this market because it's like you need a consistent narrative to an extent if you're going long or short. And a long narrative can change overnight. A short narrative can change literally overnight as well. Is he punishing China or the US? That is a good question. I actually don't know. I don't know who he's punishing here. What about negotiations? So that could be a catalyst this week. I do think they will announce more deals. They said over the weekend they have 75 countries that they are ready to get deals with. Now, why do we pump on Friday? Again, the main reason we pumped is because of one core headline, which was White House press secretary saying two things. A, that Basent's keeping his eye on the treasury market, so that gave the bond markets a little bit of relief. And quote unquote, we have more than 15 trade offers on the table. Literally, those two like pieces of information at around 140, 150 Eastern on Friday is what caused this screenshot you're seeing right here, a 2% reversal on the S&P towards the end of the day. And it's what allowed us to all have a happier weekend than if the White House did not say this. Which to me just shows how fragile this market is and how hungry they are for something super, super simple, which is just clarity. And for the White House to say these basic things, that we have more than 15 trade offers on the table and Basent is looking at treasuries, and for the markets to pump on Friday the way they did towards the end of the day, I mean, it's pretty damn incredible. But that's currently how it's playing out right now. Now, look at what China said. And so let's talk a little bit more about China right now, right? So we need a China deal. We get a China deal, things are going to be good. I think markets are going to rip if we get a China deal, especially if it's a deal that's negotiated in a really strategic way. I still have some hope that it will be. But here's what China said today after the U.S. said they made a small mistake in the enforcement of the tariff exemptions, which is why they're retroactively refunding Chinese companies the tariffs they collected over the past 7 days because they were never supposed to collect tariffs on a lot of those products. China's government said the U.S. decision to exempt certain consumer electronics from its so-called reciprocal tariffs is a small step towards rectifying its wrongdoings and urged Washington to do more to revoke the levies. President Trump's administration excluded smartphones, computers, and other electronics from the increased import duties on Friday, narrowing the scope of his tariffs of 125% on goods from China and a baseline 10% on imports from most other countries. So essentially, China said, okay, cool. What are you going to do next, monkey? That's basically what China's saying. China's saying, dance, monkey. That's what China's saying right now. They're saying, hey, dance for us. Okay, you got rid of those reciprocal tariffs for Apple, Amazon, for the big electronics goods, for the semiconductor companies. What are you going to do next? What are you going to do next? And this is why I feel like the negotiations with China, again, I'm not in these negotiations, but from a third party point of view, it looks like the US doesn't have tons of leverage. It looks like they're saying, all right, what are you going to do next? Like, what are you going to do to appease us? Because China has a lot of leverage as well because they produce all this stuff. So from that perspective, I think China is just saying, all right, so if you guys can't survive with 145% tariffs on iPhones, you definitely aren't going to survive for all the mom and pop companies, which a lot of these have gone viral over the weekend around getting their goods from China, because you have a lot of small businesses that get a ton of their products from China. These are businesses that are not doing billions and billions of revenue. Maybe they're doing a couple 100,000, couple million in revenue, and they make a little bit of profit after they owe their cost of goods. They're pleading to Trump. I'm going to try to show one of these videos, but they're pleading to Trump, hey, like, can you get rid of these tariffs? Because we can't afford to do 145%. We can't do it. And so to me, I don't know how much leverage we have against China. I think eventually we will get to a deal, but this was a big mistake. I don't think anyone should get it twisted. The fact that we have to refund companies for the tariffs that we collected at an obscene rate, 145%, that we were never supposed to collect, is not only an error in communication, which might have been deliberate, it's an error in enforcement. And the type of enforcement that these countries engaged in, or that the United States engaged in, which was not applicable to the products that we all need, is good right now, which is why we're pumping. But it definitely doesn't look like it's bullish for China, or definitely doesn't look like it's bullish for the U.S. It looks like it's more bullish for China. Along with, JD Vance. So I didn't believe the quote when JD said what he said, but this is also probably another reason that China is not a big fan of the United States right now. Here's what JD Vance said a couple of days ago around China.
Lawrence, remember during the first Trump administration, everybody said that Trump's tariffs were going to be inflationary back then. What actually happened? We had 1.5% inflation. We had the fastest growing economy in a generation, and we had the beginning of a manufacturing renaissance in the United States of America. Then, of course, we had 4 terrible years of the Biden administration. But I think it's useful for all of us to step back and ask ourselves, what has the globalist economy gotten the United States of America? And the answer is fundamentally it's based on 2 principles: incurring a huge amount of debt to buy things that other countries make for us. And to make it a little bit more crystal clear, we borrow money from Chinese peasants to buy the things those Chinese peasants manufacture.
Come on, bro. I like Vance, but you can't call them peasants, bro. Come on, bro. Come on, right? Like, you can't call people in factories peasants, especially when our entire economy is subsidized by them. Like, we all know the reason we're able to have the riches in America is because a lot of stuff is made overseas. But just that type of rhetoric, I mean, dude, you think Xi Jinping's hearing that and he wants to negotiate after that? Not really.
That is not a recipe for economic prosperity. It's not a recipe for low prices, and it's not a recipe for good jobs in the United States of America. For 40 years, we have gone down that pathway. We've seen closing factories. We've seen rising inflation. We've seen the cost of housing so high that most Americans can't afford to buy a home right now. President Trump is taking this economy in a different direction. He ran on that, he promised it, and now he's delivering. And yes, this is...
But he's not delivering anything. As until we get deals, Trump hasn't delivered anything other than nuking everyone's portfolio, which is so funny to me because he had such an easy job. We were in a bull market. We were in one of the best bull markets ever. We got AI, we got all this crazy shit, robots flying, electric jets, and all this crazy innovation going on. ChatGPT is basically hitting 1 billion users. Sam Altman kind of admitted without admitting. We'll take a look at that in a second. So it's like all he had to do was not F it up. And he screwed it up. Now, I think we'll get back to, being in a really good bull market over the coming months, but he screwed it up. And I don't know what we got out of that. Robinhood right here, 45 overnight, up about 3%. S&P 500 up 0.78%. He screwed it up. We have these crazy negotiations that so far haven't resulted in anything meaningful. And even if they do result in something, like, what are they going to, like, I'm really going to be looking at the details of these tariffs. What are we getting from Vietnam and Thailand that is so special, so incredible, so amazing that we had to go through all this? Because if it's not that good, then a lot of this volatility was uncalled for. And again, this is a concept that I've been reading a lot more about, but one of the reasons having a deficit is good is because we get to be the reserve currency for the rest of the world. In fact, a byproduct of having a deficit with pretty much every single country on the planet is that we are allowed to have the entire world use our currency, which is a good thing. It allows us to finance all the crazy amounts of money that we need to be able to spend everything, which we can reduce if we cut spending, but raising extra money from different countries and then raising the prices on consumer goods based on those tariffs might not be the most winning strategy. Here's Milton Friedman right here. I thought this was a good clip over the weekend as well, explaining why a trade deficit is not the worst thing in the world.
Let us suppose for a moment that the Japanese flood us with steel. That will reduce employment in the American steel industry, no doubt. However, it will increase employment elsewhere in America. We will pay for that steel with dollars. What will the Japanese do with the dollars they get for the steel? They aren't going to burn them. And if they were willing to send us steel and just take back green pieces of paper, I can't imagine a better deal. But they're not going to do that. They're not stupid. They're going to use those dollars to buy goods and services. They're going to spend them. In the process of spending them, they may spend them directly in the United States, and that directly provides employment in the United States. They may spend them in Brazil or in Germany or in China or anywhere else. But whoever gets them in turn is going to spend them. So the dollars that we spend for the steel will find their way back to the U.S. as demand for U.S. goods and services.
There's a lot more nuance to that theory, but in a nutshell, that's what Milton Friedman is saying, is just like our dollars that we're spending, that we are giving to all these other countries, that they're not giving back to us in a reciprocal manner, which is what creates the trade deficit, comes back to us inevitably because they all trade in dollars and they all want to be on the dollar. So I'm not saying that we don't need tariffs. I'm not saying that we don't need some level of reciprocality to this stuff. I'm not saying that Trump shouldn't be renegotiating how we think of free trade as a concept, but the level of exuberance that this administration has basically staked the second term of Trump's legacy on, which is tariffs. I mean, think about it. We've literally staked his entire legacy at this point as a president on these tariff deals being productive, which is a hell of a gamble to do. I hope we get the types of deals that Trump is so passionately advocating for. And we might, right? We might, and I'll give him credit if we do. If Vietnam, gives us some crazy deal that's just like absolutely incredible, yada, yada, like I will give full credit and I think we will get those. It's just right now, it's hard to see like how much of an incremental improvement or should I say exponential improvement over an incremental improvement are we going to see in regards to dealing with trade deficits? And how much is that actually going to grow the economy? How much is that going to reduce the overall debt that we have? Like what? I think these are questions that are not answered. And the reason I think it's important to answer ask these questions is because you have conflicting narratives across the board. You have Elon that has different narratives. You have Lutnick that has different narratives. You have Bessent that has different narratives. Bessent doesn't even really, I think, like the concept of tariffs in the first place. So I don't think there's a unilateral thesis that the White House is unified around, even though everyone ultimately feels that whatever Trump is doing is best. And as a result, I'm just very curious, how much do we get in terms of leverage from other countries? And I guess, eventually over the next few weeks, we're going to find out. But yeah, the China negotiations, just my objective take. I don't think we have a ton of leverage with China at all. And if we had to refund companies because we made an error in enforcing our tariffs and JD Vance is calling them peasants, we're going to have to probably give up more than we get from China. Now, granted, it's going to hurt China as well, and their economy's in the gutter. So it's not like it's not hurting them. And that's really our leverage, which is that China's economy is shit right now. But eventually we're going to have to see how much does it hurt them for them to come to the negotiating table. One good piece of news that we got over the weekend is that Japan is basically saying that we are not selling U.S. Treasuries. So all the yields that are rising over the past few weeks and why that's happening, it could either be due to the hedge funds having to unwind the basis trade, which is sort of a yen carry trade on steroids that hedge funds are navigating with in regards to treasuries, or it could be China selling, but it's not Japan. So Japan says right here, as an ally, we would not intentionally take action against the U.S. government bonds, as causing market disruption is certainly not a good idea. That's one of the Democratic Party policy chiefs who reiterated this morning from Japan, which is good. Japan's not selling. By the way, Japan owns about 1.1 trillion of bonds, so them not selling is a nice thing to see. Most likely, I think it's either some hedge funds or China probably engaging in some of the selling. But that's the current form of negotiations that I think, or retaliations, that China is going with right now. The housewives of the White House. Oh my gosh, dude. Yeah, that's kind of what it seems like is playing out right here. If China invades Taiwan, we are screwed 100%. And like, I don't think they're going to do it, but is there an argument they could invade Taiwan based on a different form of retaliation? Yeah, I guess there's an argument. I don't think they would do it. Hopefully. Now, Taiwan is convinced they're eventually going to invade. If you listen to Taiwan's top officials, it's a question of not if, but a question of when to them. I do think it would be easier for them to invade if they had a better and healthier economy. But maybe if the economy got to an absolute shit show because there's no I mean, if this goes on for another month, China's economy is not going to be well. Ours is not going to be either, but I think we're going to be able to withstand a month of these crazy tariffs over China. Who knows? Maybe Xi Jinping's like, all right, everyone's going to be unified around the fact that we have to go invade Taiwan. Again, I really don't think that's going to happen, but the fact that we're even thinking of it as a theory is insane because of what's playing out. And if they invade Taiwan, it doesn't matter. Like the stock market, this whole bull market thing, it doesn't like. And if tariffs were the reason, a trade war was the reason it pushed Xi Jinping over the edge to finally invade Taiwan, like, I mean, I don't know how this plays out. I really don't. That would be a hell of a legacy for Trump if the trade war caused an invasion of Taiwan. But yeah, I would assume, or I would hopefully assume that that's not what happens. A lot of people are talking about decoupling from China and stuff. And it's like, yes, I think everyone understands we need to have more of our national security focused supply chains in the United States. I was talking to this guy. I told you guys the story before, but I was talking to an employee in Andrew a couple months ago, and he said the United States should invest like $1 trillion into Intel to get them to become the next TSMC, so we don't have to deal with the Taiwan threat, right? So he's thinking of it from an extreme level, but that goes to show you how much his fear is on the China-Taiwan stuff and the national security implications of us not having our own supply chain. However, for a lot of different products and goods and services, it is almost impossible to decouple from China. Unless we want to pay people $15-20 an hour. Again, for the iPhone, the average person in China makes $2.88. Like, if we're not going to pay that much more, then obviously, we're not probably going to want those jobs, which means we're not going to have people that are willing to work in them, and we're not going to have products and services. That's the problem. So, like, yes, there's a decoupling that's important, but there's also a decoupling that's not as practical for most people out there in the world. Time to go back to made in Taiwan, yeah. Robots and then a tax on the bots. I do think we will have taxes on robot companies in the future. I think if robots take away too many jobs, inevitably there's going to be a tax on robots as well. But we are far away from that. And right now we still need goods and services, especially for the small businesses that operate basically on Chinese goods and services. Here's what Ray Dalio had to say about all this. Again, Ray Dalio has been afraid of our debt problems for a long time, but here was his take this morning.
Now, we are at a decision-making point and very close to a recession. And I'm worried about something worse than a recession if this isn't handled well. A recession is 2 negative quarters of GDP, and whether it goes slightly there, we always have those things. We have something that's much more profound. We have a breaking down of the monetary order. We are going to change the monetary order because we cannot spend the amounts of money, so we have that problem. And when we talk about the dollar and we talk about tariffs, we have that. We are having profound changes in our domestic order, how ruling is existing, and we're having profound changes in the world order. Such times are very much like the 1930s. I've studied history, and this repeats over and over again. So if you take tariffs, if you take debt, if you take the rising power challenging the existing power, if you take those factors and look at the factors, those changes in the orders, the systems, are very, very disruptive. How that's handled could produce something that is much worse than a recession.
Basically, our boy Dalio saying shit's going to hit the fan and it's going to not be good. Now, he's not in agreement with tariffs. He does agree that U.S. debt is an issue and the deficit's an issue to an extent. but he is more afraid about, the solution on trying to navigate it. Now, his theory gets a lot deeper. He thinks there's a new world order. He's actually kind of bullish on China, so he probably thinks there's a world in which China can overtake the United States in terms of being the biggest world power. But you get the point. It's just there's a lot of conflicting ideas in terms of how this whole situation is playing out. Now, you might be saying, all right, if stocks are not the idea this year, if bonds are not the idea this year, then what is going to be that central idea that ends up getting momentum? Well, UBS says it's gold. They said right here, the gold price has risen to nearly $3,240 an ounce, making the 23rd record close for the year, with 10th April representing the largest one-day gain since April 2020 for gold. It was up about 3.5%. This rally is also due to how trade-related uncertainties are impacting trust in the U.S. dollar and U.S. treasuries. The U.S. dollar is at its lowest level in about 7 months, and it continues to go lower. As you can see, the Dixie right here, 99.74. Weak dollar, higher yields, stocks selling off, and then gold going up tends to be a recipe for not the best economic situation right now, given all those are supposed to be trading at the opposite levels. We expect additional demand from central banks, institutions, and private investors following current events, i.e. trade war, poor U.S. Treasury auctions, and an ongoing de-dollarization trend. Also, positioning remains below the peak observed during gold's previous multi-year bull run after the global financial crisis, which is correct. After 2008, gold had a ton of momentum. We are now raising our base case forecast to our upside case and lifting all forecast centers to $3,500 an ounce. We also reiterate our attractive preference for the metal and stay long in our global Asia asset strategies. Goldman Sachs came out today and they went even stronger than UBS. They said, hey, we think by the end of 2025, gold's at 4,500. So it's just, like, it kind of feels like a little bit of a bottom signal to me that all these banks are screaming that they, you should buy gold right now. But the fact that they're this afraid of like the most important companies of our lifetime, Apple, Google, Meta, Amazon, like this is where the majority of everyone's capital should be allocated to over the next decade, right? Like this is where the world is going. These companies have proven execution. They have the balance sheets to sustain through any economic downturns. They have the free cash flow. They can buy back their stock. They're actually innovating. They're building products. They have this multi-year, one could argue multi-decade tailwind of AI that is going to increase productivity, margins, etc. And we want to buy gold? Like that's how scared everyone's getting? We want to buy gold? So it's one of those arguments in the context of just like, okay, people are afraid. People are very afraid. This is a TikTok video of some of the issues that are going on with small business owners as well in the context of China, which is leading to the uncertainty that we're seeing in the bond market right now.
Tariffs are now at 125%. I spoke with our customs agent and he confirmed we will have to pay $80,000 next week when our goods arrive at the border. And before anyone tells me to make my products in the US, it is not possible. Our viral and patented keepsake cases, which are our most popular products, these would be a minimum of $250 per unit to produce in the US with lesser quality wood and without the scallops. And I would have to sell these for a minimum of $400 each. I created the time capsule journal specifically for Mother's Day back in 2023, and the minimum cost to make this journal in the US would be $90 per unit because of the quality binding, pages, and the pocket for mementos and photos. I designed this to give to your loved ones so they can record their entire life story and family history. And for those who don't know, I gained a following returning lost heirlooms to families. I would find family heirlooms like letters from the Holocaust or war diaries at flea markets and do the research and return those items to living descendants. The stories I've uncovered have been so magical. And
you get the point. This lady makes this journal. This journal is like for all these important memories. She builds a TikTok account to be able to brand the journal. She goes viral. She's getting all these orders. She's having a real business. I mean, whether you care about the product or not is irrelevant. The point is, this is the American dream, right? You have an idea. You figure out how to get that idea into the world. You're responsible for the supply chain, the marketing, the financials, all that stuff. And then you contribute to the U.S. economy by not only creating products and goods and services, but by paying taxes. And getting distribution from all these different vendors and allowing the economy to go around and around, because in order to build this journal, she has to work with all these different subcontractors. That's the beauty of America. Now she owes $80,000 in customs, or customs is asking for $80,000 in tariffs based on the 145% that Trump imposed over the weekend, which I think that they're tariffed at 125%, but next week it'll be 145% because it just went into effect last week. By the way, overnight markets gains are slowly coming down. S&P was up 1%. Now it's up 0.5%. Robinhood went from 3% to 1.5%. Nvidia was at almost 4.5%. Now it's at 3.3%. Apple was at 7%. Now it's at 5.5%. So we're seeing a little bit of slowdown overnight, but we are still green overall. So like that's the issue, right? that's the issue with that's a real life issue. There's a couple other videos I saw that also materialize how important it is. But if you're a small business owner and you get your shit from China, and which is the cheapest way to allow you to make some margin and to potentially employ people, which is a job, which is, you know, what the economy runs on, you can't afford to do any of that. You can't afford to do any of that. So it's not a good thing. It's not a good thing. I disagree by saying it's not an issue. It absolutely is an issue to me. I mean, that video, you might not agree with the product, but like the point is, this is America, right? If you're able to market something and sell something and make a profit on it, that's the beauty of this country. And unfortunately, the tariffs are an issue right now. Now, again, I don't think it's going to be a ongoing issue. I really do feel by the end of April, we're going to get a resolution, in particular with China. Like, I can't imagine this lasting into May and June. And if it does, I don't know how the markets are going to be able to navigate that uncertainty, because that's like 3 to 4 months of just like a trade war. Granted, in 2018, it kind of played out that way. Eventually, we got the deal done and we moved forward. But I think with the heightened levels of emotions in this market and volatility coming from different angles, we would need this to be done, hopefully by the end of April, which would be nice to see. And for those saying, oh, well, she should just go get her journal from somewhere else. I mean, like, you probably just have never built a small business before, right? If your entire supply chain is in one place, to just go to a different country and say, hey, do you have these exact, like, no, it's not easy to do that. And if you do that, you're not going to be making money in the meantime, because you're going to have to close your operations, try to get something. Now imagine Nike trying to go from Vietnam to the United States, right? Nike on a multi tens of billions of dollar level versus a small business making maybe a couple $100,000 a year. Like the level of moving that you would have to do in terms of a building a real factory, especially if you're sourcing your own stuff. It's insanity. It's not practical. And like, Trump knows this as well. Trump, from a small business perspective, understands this is not applicable for most people, which is why I think a deal will get done. But he's playing a lot of hardball before we can inevitably get that deal done. Just make your journal from America. See, but like, this is just not, we know this is not possible, dude. Like, we know the cost of goods is cheaper across the world. And this is the, I have no sympathy for this argument, because people say just make your goods in America. Okay, then are Americans willing to pay a stronger price? Like, if that journal costs $50, are you willing to pay $70, $75, $80, $100? Like, and if you're not willing to pay an increased price, you can't tell someone to just make their product using American materials, because if you're not willing to pay for it, they don't have a business. And if they don't have a business, there's no economy, right? Like, this is just, it's not how it works. So no one's willing to pay more. That's the honest truth, bro. And here's another thing that was also really important that I found, which I think is important to look at. Let me see if I saved it right here. But we got a couple other headlines I want to look at in a second. Oh yeah, look at this from the Wall Street Journal. So this, like, not only is no one willing to pay more, the wealth effect is a real thing. So here's a quote from one of the Wall Street Journal articles of this weekend. Ocean was riding the subway to his office on March 13th when the couple's agent called to say her client's stocks were down 25% and the deal was off. These were some wealthy home buyers. The Wall Street Journal did a profile on them that were going to buy a pretty expensive house. And the real estate agent got a call saying, hey, our stocks are down 25%. We're not buying the house. I mean, and these are for wealthy home buyers. Imagine for all of us on our own day-to-day lives. Like, hey, maybe I'm not going to go eat out, or hey, maybe I'm not going to get that extra pair of jeans. I was like, I have a couple other jeans I'm going to be wearing. Like, I just don't want to. You know, it's like if people start feeling like their shit is not as their net worth is not as strong as it was before, they pull back. So it's like, not only are people not willing to pay for higher goods, they're not willing to pay at all if they feel like they don't even have the money in their accounts because of whatever asset they own is getting slashed by 0.25% or 2%, 10%, whatever it may be. It is not a wealthy problem at all. It's not a wealthy problem. This is for everybody. If you have a $200,000 portfolio that just went to $140,000 or $160,000, like, do you feel as comfortable as spending money? This has nothing to do with people that are super wealthy. It has something to do with everyone who has any level of money invested in the markets. And if you use that as a barometer for how well you're doing in life, and you can see it every day, so it's a hell of a barometer, and immediately goes down 10, 20, 30%, like, you might not feel you're doing as well, and you might not keep spending as much. Yeah, no more Saratoga water. Exactly. It really has nothing to do with how wealthy you are. It has everything to do with what is your relative wealth in comparison to where it was before a drawdown. And then begs the next question. Do you feel the drawdown was justified? Because again, I've said this over and over again, people can really deal with red stocks. If you're an investor, you have to know how to deal with it. And most people, I think, are okay with it. The problem becomes when you think things went down and there was no reason for things to go down. That's when you're just like, oh, this was like a scam. Like, why did I even invest in the first place? I think everyone's okay if they buy NVIDIA at 120 and it goes back to 100. It's like, all right, this is the inevitability of buying a stock. But if it goes to 100 because there was some semiconductor tariff that we don't need to be putting on NVIDIA if we want to be the AI superstars of the world, I think then people get upset. That's the pain I think a lot of people are having currently right now. It's not just about wealth, it's about purchasing power. Yeah, but I think wealth is a correlation between that, right? Obviously, inflation affects purchasing power as well, but it's a simple argument. How wealthy do you feel and how much do you want to spend in relationship to that wealth? And I think that affects everybody. Here's another thing that's being affected in the context of tourism. So this was a chart put out by the Financial Times today. The number of Europeans traveling to the U.S. has cratered under Trump. If you look at the year-on-year change in visitors to the U.S. by country of origin, you can see these charts are going down and to the right. So Australia, Denmark, Germany, Iceland, Norway, Spain, Sweden, the UK, we are all seeing a level of tourism that's starting to decline. Now, this can be for two reasons. Number one, I think it obviously can be to anti-U.S. sentiment. The United States has started to become more isolationist. We've started to tariff the rest of the world. We've started to call out the EU specifically on a lot of different policies. So this could just be like anti-Americanism stuff, Elon Musk, all that stuff. The other reason it could be is like all these people don't have as much money as they had. I mean, they're all invested in the same stocks we're invested. If you're in Germany, outside of investing in Rheinmetall, which has done very well this year, you could have been heavy in NVIDIA. You could have been heavy in the S&P 500, right? And all of that going down could say, hey, maybe I don't feel like traveling because my wealth is not as strong as what we currently have right now. So again, look, I think we're going to get through all of this. I don't think it's going to last forever. This is why I've not sold anything. I bought more stuff on Friday. I'm pretty damn bullish on the markets. It's just covering it on the day-to-day is like, it's like hard to even be bearish or bullish, which is why I think everyone has to define their stance. Like, and I've met a lot of people over the past couple of weeks that are like staunchly bearish and they're full cash bonds and they're just like not touching the market no matter what updates we get. They don't trust it. And then you got a lot of people that are super bullish and it's not like they love that everything what Trump's done, but they still believe that being bearish at these levels, particularly the 13% drawdown we've had, and being bearish given all the technological revolutions that we're currently engaging in with AI is just stupid right now, because we're going to get way more excitement once this subsides. Who knows when? And obviously, until we find out when, we're not going to be able to see what ends up playing out. The news seems to be engagement farming with all the flip-flops. Yeah, I agree as well. Now, granted, the administration is flip-flopping a lot, so I don't think it's just the news, but everyone's like everyone on Saturday was super happy because like the tariffs are excluded. And then we find out today they're not excluded. They're only excluded from reciprocal tariffs. They're going to get new tariffs. And then everyone's like, okay, so I guess we shouldn't be as happy because people thought like iPhones just wouldn't be tariffed. Like Apple got a straight up exemption. Trump said today, nope, that's not happening. Now, maybe he changes his mind about that. Maybe he does give him an exemption, which I think like he probably understands that Tim Cook and Apple is a company that really needs an exemption to be able to survive. They can't, or else they're just not going to sell as many iPhones. That's not good for the United States. But it's what's creating the uncertainty that everyone's waiting for in terms of more clarity, and everyone's updating Truth Social to be able to get that clarity. And until we get that clarity, I think that's where the White House makes people continue to be scared about how this is all playing out. Trump hasn't tweeted anything. The last thing he mainly tweeted was that off the hook thing. He's tweeted a couple other things, but nothing about tariffs. So no updates from him currently right now. Is Kris here? Kris in the chat? Where's Kris? Okay, let me send Kris. And Steve said he wanted to join as well. I'm going to hit him up and see if he can make it. He said he might be able to. He should be home by now. So let me see if I can get Steve on as well. And we'll see if he can get in. Okay, cool. All right, so that's what we have in the context of Europe and Trump. A couple other core things I wanted to show as well. Talked about the tariff reversal. We talked about, so All In Pod had a crazy debate. A lot of people were asking about my thoughts on that debate. I thought the debate was interesting. The real issue, daylight saving times. Yes, that's the real issue. I listened to the debate. I felt like it was a mess from both sides. In particular, I felt like Ezra and Larry Summers were trying to be like, hey, we don't have any clear goals from the administration. That's why this whole thing is bad. And Sachs and Chamath were just like, yeah, but you don't give up your clear goals to create leverage, which I 100% agree with. It's like you shouldn't say exactly what you want. Any like negotiations 101 class, which I did take in college, but my senior year, we took a negotiation class. Like, you don't give up everything at once. You don't say everything first. You wait till they come to the table and then you start to show some cards. So I feel like Summers, which was a former Treasury Secretary under Obama, and Ezra Klein, who's like a Democratic thought leader, these guys were hung up on the fact that Trump's just being super reckless with this, which I agree. He is being reckless, but like their main concern to me was like not from a debating perspective, anything that mattered. But on the contrary side, Chamath and David Sachs didn't really have a good response to what is the outcome? What do we want from this, right? So I'm on both sides here. I'm like, okay, these guys are worried about this like procedural semantic issue, which I don't think was the argument to go for. But the guys defending Trump aren't actually giving an answer for what do we want? Because you can't say it's people making iPhones in America, because both of those guys are smart enough to know that that's not happening. It can't be just more free trade, because like, what does that mean? Right? Like, so I think the entire debate was very weird because they were all talking from different perspectives. However, there was one argument in that debate, or one point from Chamath, that I did think sort of contextualized and made more sense in terms of what we could see. So I'm going to play that clip right here, because there was one thing he said where I was like, okay, this makes a little bit more sense than I thought, and I could imagine it playing out the right way. But yeah, listen to this. So this is Chamath actually materializing a little bit more for me why these tariff negotiations could play out. But overall, it was a pretty messy debate. So he goes into an anecdotal experience about a call he had with a business leader and the things he says in terms of what that business leader told him on how he can negotiate with Trump. If that can be multiplied by all the countries we're negotiating with times 10, and we get a lot of momentum from that, that's where I think, yes, the negotiations could be effective and Trump could walk away looking like a big winner from all this.
You an anecdote and I'll give you a projection. The anecdote is this weekend. My wife and I were in bed and a person called me, very successful businessman who was representing the president of a country, saying, hey, Chamath, I need some advice. What do we do here? And we walked through the three things that he and his government, that their government were trying to figure out because they wanted an off-ramp. They were like, I'm ready to cry uncle. We're ready to tap out. And again, he was calling me as a private citizen, but I think this conversation was very instructive. Number one, he's like, look, we have these really high tariffs on inbound American products. We're happy to cut these things to zero. And I said, well, you should do that. Second, while we were exploring, he's like, yeah, we have an enormous capital purchase with Airbus. I said, cancel it. Swap it to Boeing. He's like, done. And then the third, which was interesting, is he's like, we need to import an enormous amount of energy. And I said, well, who do you give that concession to right now? And it was a non-American company. And I said, well, why wouldn't you just RFP that to an American business and let them compete? And he's like, we'd be open to that as well. So he said, we're getting prepared. We want to find a way to talk to the Trump administration. And I'm like, great. However I can be helpful, I'll be helpful to you. I got off the phone. I looked at my wife and I said, if even 30 of these 75 countries do a deal anywhere remotely close to this was an enormous win. So let me give you my projection, Jason, of what the art of the deal could be here. What you do is you can rewrite Bretton Woods 2.0. What was Bretton Woods 1.0? It was fixing exchange rates. It was setting up the IMF. It was setting up the World Bank. Those were the conditions on the ground post-World War II. It made a lot of sense. What would we do if we had to write the Mar-a-Lago Accords right now? I think what we would do is work backwards from the question that Ezra asked and the answer that I gave. How do we create resiliency in these critical markets? Number one, a framework for that. Number two is how do we create limits for government-sponsored intervention against capital for-profit companies, many of whom are American? so that we can actually compete on a level playing field. And then number three, very simply, if you can do business in my country, why can I not do business in yours? And I'll just give you that story for 1 second. I was responsible. I was the head of every single entity of Facebook outside of the United States. I opened every market. My team and I created a framework for dominating. We figured out how to crack Brazil, India, Russia. You know, the one market that we never could ever make a single iota of progress? Say it, Jason, with me.
Well, China, Russia,
no,
Iran.
Wrong. We won in Russia. So my point is, in every single market except one, is it that we were just lucky in 174 markets and one we were stupid? No. So
I thought this was a little bit contextual to some more material that I needed to better grasp what he's talking about. This business leader that represents a country calling Chamath saying, hey, we can go from Airbus orders to Boeing orders. That's an American company. That's good. We can take our taxes or our tariffs to zero. That's good. That's what Trump wants. And then all the minerals that we need, or the raw materials that I believe he needs, we can source from American companies versus European companies. That's also something Trump would want. That makes sense to me. Like, if those deals get materialized across all these different countries, and Boeing stock, yeah, that could go up, but what matters more is that Boeing's going to get all these orders. They're going to employ more people. They're going to be able to pay more dividends. All that, so all of that contextualizes in a meaningful way for me to see the short-term pain for long-term gain thesis. But how many of those deals can we get? Are those deals actually worth all the pain that we're going through right now in the overall markets? And are we going to get anything close to that with China? I think that's going to be the broader question, but that was, I think, the best part of the podcast, where at least I got something material in the context of what these negotiations could look like. Chris, what's up?
Nothing much, man. Just try to figure out how to navigate these markets in this uncertain time. That's it, And I don't think there's really much I can do, or anyone can do actually. You're just gonna have to go with it, and when good companies come up, you just buy them and ride out the wave.
So Saturday we get these exemptions. Today Trump says they're not actually exemptions, they're just exemptions from reciprocal tariffs. iPhone still will be tariffed. Market's okay with that, I guess, based on the futures. How are you kind of thinking of everything that happened over the weekend?
I feel like a lot of people started to take victory laps and dunk on Trump, and then he kind of just saw that, and he's like, no, I didn't lose, you lost. See? And basically just tried to take the wind out of everyone's sails, who basically said that he was a paper tiger, that he was going to fold. I mean, all the stuff that everyone is saying right now, that's probably at least that's what I'm thinking. Because I mean, he's driven by his ego more than anything, Like, a lot of people say that the stuff that he's doing is for the benefit of America. I don't think so. I think, if you think about it, his logic was, I've been thinking of this for the last 40 years. He's been suggesting tariffs and everything else for the longest time. What has happened in the last 40 years? The US GDP has gone astronomical. All these other countries, their GDP is basically flatlined. Our people are some of the, we literally are the wealthiest people on the planet. And he's like, no. I think that's wrong. It's like, okay.
So you're still in the markets. You're not selling. You've become a Trump hater, so that's I would no, you definitely have. It's okay.
No. So here's the thing: you can hate a person's policies, but you don't have to hate every single one of them.
No,
right?
I agree, but in general, you are not a fan of him right now at all.
If you told me that, hey, Chris, what do you think about Trump and the border policies? I'm 100% in agreement. Dude, there's nothing wrong with trying to stop fentanyl from coming over the border, mass human trafficking coming across the border. That's absolutely 100% right where he's going with that. But does that mean that I agree with his economic policies? No.
But here's the question. Let's say that you just heard the Chamath video of all these deals. Let's say one by one over the next 2 months. Chamath
has been bending himself.
Would you give Trump credit if we get really good deals for all this?
We're not going to know the ramifications, and not to mention doing a deal with Egypt, doing a deal with Ethiopia. That's not going to matter. What's really going to matter is if you get a deal done with China, where you actually open them up for social media access for our companies, which in my opinion will never happen. Right. Yeah. Most that Trump is going to get out of this is just basically the same status quo that we had prior to, right? And then the companies will just, or the countries will just wait it out until Trump is out of office, and then they'll of course do what they always do. The point is the world order right now revolves around us, and he's like, no, it shouldn't revolve around us because I don't think it should. And it's like, it's the dumbest thing because it goes contrary to like literally eons of thought.
Yeah, I played that Milton Friedman clip that you shared on your Twitter. So you're kind of dead set on this idea that the trade deficit is a good thing because of what it does to our currency.
I think what it is the trade deficit is a representation of what we're actually doing when it comes to producing more. So every trade deficit is honestly, once again, it's just a capital surplus, right? So right now, Amit, if you had to pay $8,000 for your camera, you would not start a YouTube channel, right? Or at least it would be much harder for you to start a YouTube channel.
I would start it. I would be yapping from my phone, but yes, it would be hard.
No, but then if your phone also was expensive, you couldn't do it, right? The thing is, if you lower the cost of doing business, what you can do is you can actually free yourself up to do stuff that people are not thinking. Think about how many people right now work in creative space and they don't work in the factories. Okay. Yeah. Now here's the thing. You could have worked in the factories, and made whatever, but you might not have been able to get out and do other things. I think human labor and human capital is the thing that we have to keep in mind, where by actually not having to do all this extra shit, we can actually free ourselves to do more productive stuff. Here's an example. My wife right now, and this is everyone's, I don't know if you want to call a wife, husband, whatever. My wife is more productive because we have a dishwasher, because we have what is that thing called? Washing machine, right? If she had to go and wash all the clothes by hand and do all the dishes by herself all the time, she's not as productive.
Why don't you wash the dishes? Why don't you give her some relief, huh?
Because I'm working too. I'm just saying when you have things that make you more productive, that means that you can generate more value. This frees up my wife to actually go do other things, to maybe work an extra shift at her hospital and bring in more money. This is what I mean. Productive use of labor is the most important thing, where that labor input should result in the most productivity possible.
Dude, I get what you're saying, but the analogy was wild, which is why.
Of course. No, but I'm saying, look, it's because we can afford a dishwasher, and it's because we can afford a dryer and washer that this all works, right? If we had to literally do all the things that we do right now without all this additional input of cheaper goods, cheaper services, we wouldn't be able to actually expend energy on creating new things and getting bigger,
It's very similar to all these little TikTok businesses that I've seen. Like they don't have the ability to be creative and market their products and all this stuff if they don't have cost of goods that are smaller than.
You look at Shark Tank, right? These guys all these people that come on Shark Tank, they all have creative ideas. They create new products. And then most of them, what are they doing? They're sourcing from China. They're sourcing from Vietnam. They're sourcing from overseas. This gives them the free time to actually work on creating a better product, right? And those margins that they could use to sell other places. This is the challenge that I have with this whole theory, because they're like, okay, just make this product in America. Okay, well, the cost of goods to produce it here is going to take so much time, so much energy, so much cost, that the idea is never going to get anywhere.
Dude, America is creative and services based.
Yeah.
And we've been having this debate for a while of just like, do we want to be manufacturing based? And for the national security important stuff, yes. But like most people, like most kids, they want to grow up and they want to be an influencer, be a YouTuber, be like they want to do stuff in crypto. Like they want to do stuff that has to use their mind more than their physical labor. And I don't think that trend is reversing anytime soon.
Yeah. I'm telling you, it's one of those, this is one of the I think it's one of the stupidest ideas I've ever heard someone come up with, trying to change the geopolitical order that we benefit from. Like it's
I'm trying to be objective here. If we get really good deals, I will say it was worth it. But I am still struggling to figure out what level of manufacturing this administration is trying to get to make America this new behemoth. Like Tesla manufacturing in the United States, that's amazing. But how many Teslas do they want that are making meaningful like Tesla's making meaningful products? But again, it's to your point, t-shirts.
But even Tesla imports some of the products that it gets from overseas, right? and then assembles them here in the US. Like that's what a lot of car companies do. They basically build a supply chain. Like, okay, here's an example. You said Boeing airplanes, right? Look, there's been a diagram on Boeing. Look at how many products are actually coming from overseas and being produced in different areas. And then the final assembly is in Seattle. Okay.
Yeah.
So I think a lot of what this administration is trying to do is, oh, let's get these jobs back. Like once again, it goes right back to what Dave Chappelle was saying, right? Stop trying to give us these Chinese jobs.
JD Vance was wrong for saying peasants, because obviously that's just a wrong look, but that's what essentially Chappelle was saying in a humorous way. Like Americans don't want those jobs.
Yeah. Not only dude, we have a very low unemployment rate too. Like compared to the rest of the planet, we have a very low unemployment rate. And what's the idea? Let's bring jobs back to the US. Let's, instead of people working on creative things, innovative things, let's put them in the factories. Like, do you really think that's
there's no American high school students that want, like some of them probably want to work in the factories, but the majority of them want to go do creative, interesting things that use their intellect more than their physical labor. It's just like, it's just not the world that I think Trump wants to get us into, which is why all of this doesn't feel like it's for manufacturing. I feel like there's something deeper here. Do you feel that at all? That he knows how absurd it is for Americans to make iPhones, that there's a deeper purpose behind all of this?
I think it's something that came in his idea sphere a really long time ago. And basically, he's trying to make a name for himself by pushing this and saying, look, I radically changed the country around for the better. And the thing is, it's always like, the thing is, the intention is good. In my opinion, he has no intention of creating difficulties for everyone.
Agreed.
But that doesn't mean every idea is good. You know, how many ideas that people have come up with in the last 50 to 100 years, and they actually turned out to be shitty ideas? Like, here's an example. Oh, let's give all the people low interest loans to buy houses for 30 years, right? Idea, good. But in practice, what ended up happening? Government subsidized all the risk. The banks got all the profits. And then we had the great financial crisis. Someone said, hey, everyone should go to college. What happened? Everyone started taking student loans. And the university is like, oh, well, I don't have to foot the bill for this. I don't have to take risk. Keep letting all these kids in and let's go. And now we have an entire generation of people loaded with student loan debt. Right. Yeah. And the only reason why the student loans keep getting higher, higher, and higher is because the government said, oh, we'll guarantee all these student loans, regardless whether the kid needs it, not, whatever the income potential is in the future. So this is the kind of stuff that always gets me. It's like all these ideas, especially politicians, they push to basically feel like they're doing something to help everyone. When in actuality, the best thing they could do is don't help us. Just stop trying to help us, motherfuckers. You know? Let the status quo do the status quo.
And there's two things on this: the trade, like mechanics, plumbers, all that stuff. We're missing that in the United States. So it's not like we're saying everyone should go to college and become a sociologist. They're like, no, we need people to do hard things. It just might not be as hard as making an iPhone.
If you speak to so many people that are locksmith, they're electricians, they're plumbers. I know a lot of people that they started off with college. And then they dropped out of college because they weren't getting anything out of it. And then they ended up, because of their, family relations or whatever, they get onto an apprenticeship. And then they ended up becoming that. You know, I'm telling you, this is not complicated. I would say at least 50% of the people that I know don't work in the same scope as their original degree from college. You know.
By the way, guys, for all those that are saying, Steve would be debating this. No, Steve doesn't disagree. The disagreement Steve has with Kris is that Steve thinks that eventually this will be resolved. He's not freaking out too much about Trump and all that stuff, but he doesn't agree that we should be making iPhones in America. Anyone that I know that I trust in terms of their investing perspective does not agree with any of this tariff trade war stuff. But Steve is just a bit more chill about everything that's happening. He's not freaking out about the day-to-day candles going up or down. Me and Kris freak out about it every day. So that's I don't think anyone actually thinks it's a good idea to bring all these jobs back to America.
Well, the thing is, some of them, I have to say, some industries are worth bringing back and making more innovative. But the way that you do it is you don't try to tariff the other country. Instead, you invest in the people that you have here, invest in the innovation part. Here's an example. All those engineers that you met at Figure, the robotics company, right? That right there is what you should be leaning into. Make it so that labor becomes cheaper and cheaper, and then you can actually, like outcompete the Chinese labor and actually now produce these things here, But the thing is, you have to incentivize that.
Yeah.
So this is the whole, like, the way that Trump is going about this, in my opinion, is going to cause destabilization of the credit markets. And look, I don't give a shit about the Wall Streeters either, okay? Including myself. Like, trust me, I'll be fine. I know how to make money. Markets go up, down, left, right. It's not the hardest thing in the world. Do you know who's going to actually struggle? It's the average person, okay? Someone who's built a small business, who relies on overseas goods to basically do packaging, storage, whatever. All of those things are going to end up costing way more, and they're going to be driven out of business. Most businesses, small businesses, don't have more than 90 days working capital.
No.
Okay. If the credit markets are freezing up and at the same time your supply costs are going up, that is the road to bankruptcy. And once those businesses go bankrupt, it's really, really hard to get those same people back into the freaking into the business again. Okay. And then what happens? That business goes out. Now you got lower tax revenue, and you've got higher interest rates at the same time. You're literally causing you're causing a massive problem right now.
Yeah, I don't disagree. I do think some of these deals that we get are going to be positive. That is my belief, which will justify all of this. But outside of that, I just don't know a lot of people that want to bring back the types of manufacturing jobs they've talked about. Also, here's a funny thing. I mean, all these jobs that are getting paid horrible wages in China, if China automates those jobs with robots also, it's not like those jobs are going to be relevant in the next 10 years. Like if robots start building iPhones, or if robots start making t-shirts or whatever in Bangladesh and in China and in Vietnam, then like obviously that's going to happen in the United States as well. So we're eventually going to have to evolve to a society that's not just rooted in pure manufacturing, if you believe at all in the humanoid robotics thesis. And that means that those jobs are temporary, if at all, if they come back to the United States.
Yeah. I mean, this is gonna be an exercise in literally I don't know, man. If everything falls apart, which it probably will get to that level before Congress steps in, hopefully, because luckily for us, like I said, I believe in freedom, I believe in capitalism, and one of the great things about it is that the market and voters have a say in how things are going, right? So right now, if people start losing their jobs, and trust me, there's a lot of Republicans that are small business owners that are flipping on Trump right now. Okay. Yeah. A lot of people. Like if you go to any like website, right? Like you go to any of these, any like news site right now, they're actually showing how the average person is getting hurt by this. I mean, even on TikTok, you have all these influencers who had all these things going on. They're losing their shirts on this whole thing. You know,
I'm trying to find there was this video. Did you see the video about the guy who sells tires? That one was going viral, and he was a Trump.
The one that I saw was the honey video. Did you see that? Like there was a farmer. Let me pull it up real quick.
I'm trying to find I don't know if anyone knows there's a guy who sells tires, and he was really upset about the tariffs.
Here, I'll show you one of the ones that I have here. Check this out.
Make honey. At Secret Garden Bees, a honey farm in Linden, North Carolina, farmer Jim Hartman has one eye on his bees and the other on his bank account.
Ideally, we'll get 100 pounds of honey per hive per year.
How do you feel about paying more for things?
Well, you know, if you find someone who says, I'm happy about paying more for something, you point them out to me. People who already couldn't afford fresh vegetables, who couldn't already afford to put good food on their plate, are the ones that are really going to be hurt by this.
Did you ever think when you voted for President Trump that things were going to cost you more and you were going to lose money?
I never thought I was going to lose this much money, this fast.
Jim is a Republican who voted for Donald Trump 3 times.
How do you feel about your vote for Donald Trump now?
Well, I feel like perhaps I should have considered some other options.
Among other things, Jim imports packaging supplies for his honey, so he's paying real close attention to the tariffs Trump just put in place.
We just bought our year's supply of bottles from Taiwan and our year's supply of corks from Portugal about 3 weeks ago. So that would have been, another 5,000 or 6,000 out of my pocket.
which is partly why he's repairing instead of replacing this 40-year-old forklift.
The cost of equipment has just gone through the roof to buy anything like that because it just would be cost prohibitive.
He's also holding off on improvements around the farm.
Well, we're not going to hire any more people, that's for sure.
It's more than just the tariffs. For the past 2 years, Jim has been selling honey to the federal government, which then provides it to schools and food banks. But after Donald Trump took office, the USDA cut those programs suddenly as part of the federal government's effort to streamline spending.
For a lot of other local farmers around here, it was a major source of reliable revenue. For me, it's going to cost me around $150,000 a year.
$150,000.
Yeah, roughly 50% of my revenue.
That's a huge hit.
That's a massive hit.
Not far from Jim's farm, we found other Trump supporters who give the president high marks on tariffs.
How do you feel about the tariffs?
Well, I feel like for years we've been getting ripped off, and why not make it fair? 0-0. And I think Trump was upfront about it. He said we're going to hurt some now.
I think some of the countries they're already starting to come around. It's going to be good. I really believe that.
You have faith in Trump?
Yes, I do.
I think he's doing the right thing. In order for us to get back where we need to be, he needs to get the money somewhere, and they're charging us. Why not charge them?
Different perspectives, but obviously for the business owner, that's a rough hit.
Yeah. The thing is, the people who are not going to be impacted by these tariffs may feel a little bit like, for now, they're probably going to support this whole thing. Okay. If you're not feeling it at your job, if you're not feeling it in your day-to-day life, you're going to say, wow, I think Trump is doing a great job. But trust me, if you start to feel it, people are going to turn. Right now, those people that he spoke to, they're all on fixed income, and they're probably, they're a little bit older and stuff, right? So maybe like their day-to-day life isn't going to be impacted by this stuff as much. But if, like I said, you own a small business, if you have a job that was maybe in the federal government and they cut back on spending, all those things, they're going to end up cascading into consumer sentiment. And that's the other thing that we should be really discussing right now, whether maybe that's one of the plans of these tariffs, to basically destroy consumer sentiment, to kill inflation. Because if that's the goal, it's working.
Maybe, right. And maybe that, because they know the Fed's not going to cut until inflation gets to their levels. PPI was great on Friday. Do you think that is actually the master plan, is just reduce demand?
Listen, if that's the plan, this is the wrong way to go about it. Because at the same time, because the bond market is screaming higher, because it's telling you that we're more than likely to get inflation long term. Yeah, you'll see aggregate demand like come down a little bit, but then you also have inflation against it, and you're destroying GDP. If GDP right now, when we were coming into this year, I think it was a solid 2.5 that most people are projecting. Now people are saying it's likely to be 1. Maybe even negative the first quarter. Like if you look at Atlanta Atlanta Fed now GDP, that's going to be bad. So you're going to get people to stop spending much money, and maybe we'll have deflation, but deflation at the risk of a recession is not the way you want disinflation. That's actually going to cause more trouble. And I'm telling you, the challenge that you're going to have is the credit markets. As the credit markets start freezing up because lending standards go higher and higher, you're going to see a lot of people and a lot of businesses go bankrupt, and then it's gonna start to hurt. So
do you think so here's my theory. I think if the bond market this week continues to not cooperate and they scream yields higher, do you think Trump walks back the rhetoric and calms them down, which is what he did last week? Or do you think he just says, screw it, let's go all the way and just see what happens? How do you think he reacts to bond yields going higher?
I don't think he has a choice. I really don't think he has a choice. Because the thing is, either he doesn't have a choice or the Republicans are going to end up turning on him. Because that's the thing. The Republican Party, believe it or not, is a free trade party.
Yeah.
Whatever Reagan, Reagan, if you look at anything that happened over the last 30, 40 years, the Republicans have always been the free trade party. Okay. This right here is the socialism part. This is Donald Trump being a Democrat right now. This is what believe it or not,
Bernie
who's supportive
Sanders,
of all these tariffs? Bernie Sanders.
Yeah. Who, by the way, was at Coachella. and introduce the music artist, because a lot of working class folks paying $5,000 for a weekend at Coachella. So there you go.
Yeah, exactly.
Here's a chart by Brad Gerstner, and like people I respect in the investing community, whether it's Ackman, Gerstner, Ken Griffin. I mean, every one of them is coming out and saying this doesn't work. So Brad Gerstner said the U.S. government must sell $10 trillion of treasuries in 2025 to finance our national debt. Assuming foreign government demand at 35% equals $3.5 trillion. Small reductions in demand leads to much higher rates for Main Street, not just Wall Street. Mortgage rates are now over 7%. That affects Main Street. And Fed quantitative easing just to fill the hole. He then says the bond market will help shape tariff deals, aka saying Trump can't do shit because the bond market's going to tell him he can't do shit. And he's being pretty explicit about that as a Trump supporter.
Pretty much. Look, the cost of capital is, who's the highest in terms of for business capital, who ends up paying the most? It's not the big Wall Street firms with AAA credit ratings. It's the average person. Go to a bank right now and say, yeah, I want to get a business loan, and see how much you're going to get out of them.
Yeah.
Yeah. I'm telling you, working capital is going to be a major problem for the businesses. And hopefully this is where the Trump administration, if they do want to carry on these tariffs, they're going to have to work with Small Business Administration to really keep these small businesses afloat. Because I'm telling you, if these small businesses start going under, you're going to see unemployment rise, and a lot of people who've committed capital are going to lose money, and then it's going to be a cascading effect that you don't want to have.
Do you think Lutnick survives all 4 years?
No, I don't think he survives with it. Well, you know what? I take it back. With Trump, I don't know, because he might be keeping Lutnick in like a boogeyman or something, like good cop, bad cop thing. I don't know if that's really going to work out. What I do know is the midterms are literally 18 months away, which means I think Trump has probably by the end of June, maybe the end of September, to get things in order. Because if he doesn't get it in order by then, and we do get hit by a recession, recessions typically last, I think, what is it? How many months? It's I think 12 months, roughly.
It's a little bit less. I think it's 10 months, a little bit less than a year.
Yeah. So then what's going to happen is literally you're going to be in a recession while the midterms are going on. And what do you think is going to happen? The Democrats will take both the House and the Senate, and then you're going to end up in a world of hurt.
Kris,
6 to 18 months. Yeah.
Kris, we have a friend who joined backstage.
Go for it. Bring him on.
We have a friend who joined backstage. Chat's going to be so happy because it's basically his show.
Steven?
It's Stevie Steve. What's up, Steve?
What's up, guys?
What's going on, Steven?
Did you guys watch the Masters today?
Yo, who's this Rory guy everyone's talking about?
Oh my God, Mick, just leave. Let me.
Yo, look at this guy. Congrats to Rory McIlroy. Like, who that? Like, all I did on Twitter, like Rory. I'm like, who the fuck is Rory? Like,
yeah, it's freaking Rory.
Yeah, who is Rory, bro? Like, all day.
He's one of the greatest golfers of all time and a world-class drinker.
So what did he do? He won the Masters today?
Yeah, he won in a freaking playoff. It was amazing.
This in Augusta, Georgia.
Chris's backyard.
Congrats to Rory.
Not that backyard. Augusta's pretty well. It's not that far away. My father-in-law is a big fan. I'm not nearly the golf aficionado that he is. He loves golf. Literally, he goes to the golf course at least once a week.
Nice.
Steve, how much money did you make betting on Rory? Because we know that's why you're really.
No, I don't bet golf.
Why?
Because it's too unpredictable, and I was watching it. I looked at the odds going into the playoff. Rory was minus 140, and Justin Rose was, I think he was plus 120 or something like that. It wasn't crazy odds. And I wanted Rory to win. I was pulling for him all week, but he had bogeyed 18, missed the putt to win. He shot 73 in regulation. Justin Rose went on a heater and shot 66. It was just,
You said he missed the bogey?
Yeah, he missed the putt for the win on 18 to go to extra hole.
Isn't a bogey a cigarette?
A bogey could mean a different plane in the air, could mean a cigarette. Is one over.
Can I ask you guys? Can I ask you guys a question? There's something in the comment section someone just said, and I respect Billy. This guy Billy Jack. He said, "Kris, be more American on your political views, please. Tell me, what is a political view an American should have? Because I at this point, saving the average person from a recession, I thought that's a pretty American thing. Having my fellow countrymen not starve and go out of business, isn't that kind of an American viewpoint?"
I didn't hear anything that you said, but I mean, you did serve in the military, so that's the wrong thing to say to Kris.
It's facts.
So.
That's fact. Also, I think the polarization over people's different perspectives on America's free trade policy does not mean they're not American. You can disagree. Yeah. That's what this, but like to say that's not like, come on, bro. That's not American.
Everybody's got a different opinion.
And just because I am anti-tariff doesn't mean I'm not anti-China. Like trust me, you can't find someone that's probably more critical of China than I am. All right. I've been critical of China forever, dude. I have no love for the Chinese. I have no love for their system at all. But that doesn't mean that I'm okay with a economic system and that, that basically is, believe it or not, tariffs are anti-American. If you think about it, right? What do you think we fought the Boston Tea Party? What was that? It was a tax, right?
Yeah.
Didn't we fight tariffs? Isn't that how we got started with all of this? So how is me saying I'm anti-tariff, anti-American? Believe it or not, that's not
led us into breaking away from England. So,
Steve, what's your take on what happened over the weekend? So we got exemptions. Then you called me on Saturday. We talked about the exemptions, and then this morning, it's not really exemptions. It's just different types of buckets of tariffs. How are you thinking of everything?
Nobody knows what's going to happen. I'm just not worried still, because I think ultimately we're going to come to a deal that works. I am afraid. Being afraid and worried are two different things. I'm not worried about that stuff. I am afraid that we are in a recession right now. And the reason I say that is because every time since 1948 that unemployment has gone up by a percentage point, you've either been in a recession or went right into one. Unemployment's up 0.8% over the past year. We were at 3.4% this time last year, and we're at 4.2%. And I keep hearing people say, we're at 4.2%, we're at the all-time lows. We're not at all-time lows. All-time lows are around 3.4%. Like, unemployment's moving up. And if it keeps moving up, I think we could be in a recession. I mean, I think we still have a little bit that we can avoid it. But if GDP growth comes in negative this quarter, it's not going to be pretty next quarter. And they got to cut. The Fed is backed into a corner because unemployment is up and inflation is down. Inflation's gone from 3.5% to 2.4% year over year, and unemployment's gone from 3.4 to 4.2.
Yeah, but Stephen, there's one thing that they also look at, which is inflation expectations, which are going through the roof right now. And with their mandate, they have to get what is that thing called? Inflation expectations down. If the consumer thinks that inflation is going higher, eventually people are going to be demanding more in terms of wages. If they start demanding more in wages, now employers are going to have to end up, acquiescing to that.
Expectations and what actually happens are two different things. And when you have oil at 61, we haven't even felt those ramifications through the economy yet. And that could offset whatever comes down the pipe over the next 3 to 6 months. We don't know what we don't know. Right now, the only data that we have is inflation is going the exact way they want it to, and unemployment is going the exact opposite of the way they want it to. So the Fed's backed into a corner right now. They are basically projecting that a June cut is going to happen. The chances of a May cut is up to 38, 39% yesterday. I don't know where it's at today. We could check CME Group.
Oh, it's at 15% today. So May is down, but June is very likely.
So hold on.
Yeah, May's at 15.
This was at 38 or 39% yesterday.
Correct.
For a May cut.
Yeah.
And now June is at 61.5 for 25.
Oh, you know why it went down, Steve? Because when Lutnick said it's not that iPhones are excluded, it's just that they're in a different bucket. The market felt, inflation's going to happen then if iPhones still are going to be tariffed?
You're going to have a lot of CEOs talking to the administration. There's going to be a deal that works. There's no way that they're going to hand the midterms over to the other side without a fight. If they allow all this to play out in the worst way, kiss political futures goodbye. That's why I'm not worried that cooler heads won't prevail.
So you agree with Kris on that? You agree that they're going to have to save the midterms, aka they won't crash the economy?
Yes. If they crash the economy, say goodbye to the midterms. Say goodbye. Especially if you put us into a recession and everybody's losing jobs. If you lose a job because of this, you are never voting for Republicans again. Ever. Ever. They know this. This isn't anything new. I mean, you got to think that they're going to be smart about it. They caused a little bit of havoc. It's been a week and a half. 2-3 weeks isn't the end of the world. But you start getting into 2-3 months instead of 2-3 weeks, much different story. A lot of damage can be done. And you got a lot of unemployment coming up, you're losing voters.
I think my biggest concern, honestly, is unemployment.
Yeah.
Unemployment and small businesses. If those start faltering, then they kind of like it. They end up compounding on themselves over and over and over. And the thing is, it's really hard to actually like stave off once that super cycle of unemployment starts. If business, and you can already see businesses are already spoken about cutting back on hiring, cutting back on capital. That means that now people are going to be losing jobs. If you start losing jobs, that means those people don't have money to spend on goods and services for the next layer. Those people have to start cutting back, and then those people under them have to start cutting back. Trust me, the super cycle that happens when this thing really like blows up is a major problem. The other thing is all of our corporate debt that
I was just going to say that.
If you look at corporate debt rolls over every 5 years. All of these corporations, they took on a crap ton of debt during COVID when interest rates were super low. And a lot of that debt is coming due in the next 2 to 3 years, which means that they're going to have to be refinancing at a much, much higher rate than what they had previously, which means that now they're going to end up either in two things, either in default because they can't pay back, or they're going to have to eat the margin hit, and their business is going to go down, which means they're going to have to make it up somewhere. And usually they make it up by cutting people.
And Mick, go to Fred and type in the Fed effective rate and bring up a chart and look at the past 10 years. Actually, go out 40 or 50 years, go max. Conventional wisdom no longer works. We have never, ever been in a period where you have had next to no rates from 2010 to 2015, whatever that is, and then again right after COVID. Corporate debt, and you and I have talked about this on some of your shows last week, is going to be a problem. This is the other reason why the Fed is backed into a corner, because all these companies took out cheap debt and refinanced when rates were under 50 bips.
Yeah.
Right now, rates are at 450 bips, which means that they're going to be refining at 5.5%, 6%. Their margins are going to compress tremendously. And the only way for them to right size is by cutting people and cutting expenditures. And
but this is wild right here. Like 5% in 2007.
Yeah.
For freaking 10 years, 0.1% was the interest rate.
Yes. Everybody was able to borrow money at next to nothing out of the great financial crisis. And then it started going up again. And then you had COVID and you had rates go down to the same level. You go back historically, you've only seen these rates for like a month or two in the 50s or 60s. You've never seen this before. And
wait, so I have a question. You guys were both adults during that time. Like what was it like to have these cheap rates? Was it just like amazing, or?
I mean, I wasn't borrowing money at that time.
First and foremost, we had unemployment hit almost 10%.
Yeah.
Okay. So the thing is, these zero interest rates, that's what helped a lot of people to borrow money at the time to basically invest in things, invest in businesses, invest in real estate, invest in commercial real estate, all these things. That is what got us out of that giant recession.
Yeah.
Okay. Literally, the great financial crisis caused us almost 10 to 12% unemployment at times. And there were some parts of the country that were absolutely decimated by this. So the only thing that really happened is the cost of capital came down significantly. And then people were able to kind of like pick themselves back up again. That's what happened. So look at the unemployment rate in March, right there in 2008. It got to almost 10%. That means 1 out of 10 people were not working at the time. And so over time, you look at how many years it took us to get to that, back to that unemployment rate that we had. Okay.
Wow.
It took us almost 12 years post great financial crisis to get back to like acceptable levels again. Okay. Where the economy was booming again. So if the same thing kind of happens that we had, during the 08 crisis, then it's once again going to take us a long time for us to recover. Look at what happened after in the 1990s. After the 87 crash, look at unemployment, how far it went up to almost 8%. The other way. That's 87. That's when the markets crashed, right? Unemployment still went down, but then it started going up when George Bush, the first Bush, started to raise taxes and Desert Storm. And then we had that super cycle of, things getting better, and then boom, we went back up again.
Look, rates should not go back down to where they were, but they should be, because of where they were over the past decade, between 2 to 3%. You can't have rates at 3.5 to 4.5% because all the debt coming due is going to get refinanced to higher rates that increase margins and cause people to lose jobs because businesses can't sustain current payrolls. I mean, we did it to ourselves. We had to do it, but you can't keep a restrictive Fed policy when you have this much corporate debt terming. And I will say, this is not like the great financial crisis in regards to when I was driving through some of the wealthiest neighborhoods in the country, there was every third house was for sale. I mean, none of them are for sale now, but it was a much different landscape, night and day. But
Steve,
if you go back to that chart that you had and you look at every recession against unemployment, every time we've gone up by 1%, we've either been in or headed right into a recession. We are getting dangerously close right now because we're up 0.8%. Every time, going back to 48, it's happened. It's never been the inverse yield curve, like I've always said. It's always unemployment that triggers a recession.
But I hold on,
impacted?
I think you're off on one thing, because although unemployment is up from 3.5 to 4.2, when I'm looking at these recessions, we're clearly in the 5% range, 5.5. So we're still well below a recession.
But the common factor is that unemployment has gone up by a percentage point.
Yeah, but it needs
That's
to
the
reach
common factor.
Okay, so you're saying the 1% itself is the delta is enough.
The 1% is the common factor that has placed us into a recession.
Yeah, that's fair.
Every time.
That's fair.
And once it starts to accelerate, it's really, really hard to stop.
Okay, so Steve, what is your actual stance on tariffs? Like, do you think this trade war that we're launching is a good idea, or how do you philosophically think of it?
Look, I want fair trade for American businesses. I mean, I've been very clear on that. How we get there, there's a lot of different paths. I don't know that there's one correct answer. I think everybody's got opinions. I've seen good ideas. I've seen bad ideas. I haven't done enough research into how much we export and how much we intake from each country or the different things. But, I'll use the example of, and this is not true, this is a fictitious example. So I'm just not even going to name a country. Country XYZ. We know coffee is predominantly produced in one country, and really 4 or 5 countries control the coffee trade. So country XYZ has the largest coffee trade. They're importing $500 billion worth of coffee to the US, and they're paying a 5% tariff. The US is importing the same amount or exporting the same amount of corn and wheat to that country, but we're paying a 20% tariff. It is unfair to our businesses that they're paying a higher tariff than the goods coming into the US. We should have fair trade. And when you don't have fair trade and you take a good that is produced in multiple places, not just something that's dominated in several, it makes it much harder for American businesses to compete overseas. So I would like to see fair trade. I would actually be fine with flat reciprocal taxes. You charge us 10%, we're charging you 10%. End of story. No gimmicks, no nothing. I'm fine with that.
I'm 100%. I'm in 100% agreement with
field.
Steve with that. Yeah, 100% agree with Steve.
And
on
if you
that,
want zero, I'm good with zero. I don't care. You charge our company zero, we charge you zero. You charge them 50, we charge you 50. You know, it's to me, I wouldn't go at it as because we're the largest economy in the world, you're going to pay an additional tax to get in.
Right.
I wouldn't slap a 1% VAT or a 5% VAT on. I just wouldn't. But that's me. I want fair trade for our companies.
But do you think the rollout of this tariffs, not even from a political perspective, does it make sense to you how it's happened or no?
Look, when you negotiate, you got to come out strong. You got to make the other side think that you're not willing to move and that you got to try to make them understand that your deal is their best deal. And you have to start from a certain point. That way, you know you're going to negotiate something, but you can still come out with a win.
Yeah.
So I understand why they started where they did and how they did it. I wish it was less public, though. That's just me.
And you don't agree that people should be making iPhones in America?
I mean, look, I think it's going to be really hard to onshore some of these things. And if you onshore them, I think it's going to be a level of automation, not people working in factories assembling them. Either way, I think it would be more expensive because of the amount of what it takes to run a business. And I don't think people really think about, you know, you're not talking about a 5-person company where you can get away with not having certain lines of insurance and carrying certain excess lines and then all these other things that go into it, where you're talking about large scale businesses and the cost of doing business in America, it's just more expensive than other places, and that has to be considered. So I think that it would be cheaper to do it somewhere else and import the final product. But that remains to be seen. Now, if you could do a deal with Mexico, I think that would be a lot better for us, because I think we should think about North America more strategically than we are. That's just me.
And do you think, or Chris, go ahead.
No, I was going to ask you, Steve, who do you think who pays for the tariffs?
So look, I'm going to give you your immediate answer that you want me to give you because you're correct, but I'm going to expand on why I think it'll get evened out. Mm-hmm. So initially, the increase in costs most of the time would have to be taken on by the consumer. Most of the time, it is what it is. Businesses, if it's a couple of percent, a business like Apple may be able to absorb.
They'll just eat it up.
Yeah. They'll eat it. Yeah. But you have a company, smaller company like Coca-Cola, you very well may see a 6-pack of Coke. I don't know what it goes for $3.50 to $3.75 or $3.99, something like that. I mean, a smaller company would probably have to pass on some of it to the consumer. Maybe not 100% of it, but they would have to pass on some of it. Now, I think that the administration truly believes that they're going to get a crazy tax package passed and that they're going to be able to, by the combination of increasing tariffs and taking in revenue from other countries, and if Doge can actually cut $1 trillion from the annual budget, that would work out to around 12 grand a citizen. So I think that they are really looking at this as, if we can give a very big standard deduction. I mean, look, they've talked about 150,000, no tax, federal. That's like 18 grand on the federal rate. So, I mean, let's just say they come out with a standard deduction of your first 100 grand you make, no federal tax. I mean, you would have more money in your pocket, where if you got a 10% increase in all goods, you're still coming out at a net positive.
But then what's the benefit? What was the point of, like, if it's flat, it's washed, right?
No, it's not flat. You would actually have more money in your pocket.
But incrementally, how much more money do you actually get for the cost of goods going up? I guess, like, what do we get from this if they're just going to reduce taxes but raise it from other countries?
Well, in order to reduce taxes, you got to increase your revenues. And they're going to increase their revenues by the tariffs, increasing revenues, and then Doge cutting expenses, so your outlays decrease.
Yeah, so but so they would have to
allow
raise.
them to give you.
They're also expecting 3% GDP growth as well,
Yeah.
so that
And
this
you grow
way,
your way out of it.
yeah. and you grow.
But
your
they
way
would
out.
have to raise enough tariff revenue to overcompensate for the lack of tax revenue. Then it would have to be well beyond.
Well, it's the combination of that and the Doge contracts, because if you save $1 trillion a year,
Well,
that's
Doge,
roughly.
Elon said we're doing 150 billion. He walked it down.
I'm just throwing out the number. You would need around $1 trillion to save around 12 grand per taxpayer.
See, the problem is there's no one that's going to go after entitlements, which is the main cause of your problem, right? Like, honestly, the thing that's going to bankrupt us is probably going to be two things: a combination of excess military spending and then also at the same time entitlement spending, because neither one of those really add a lot of value. I mean, technically some entitlement spendings can with healthcare, but the challenge is sometimes the incentive for healthcare is to keep spending more and more instead of being a little bit more, cost effective with medicine. It's really hard to judge the total outcomes when it comes to healthcare. So people think like, oh, just because you spend more, and I work in healthcare, trust me, just because you spend more money doesn't mean your healthcare outcomes are going to be good if your entire population is obese. Okay. You want to actually affect better healthcare for people? Stop selling them the sugary shit that's everywhere. Get people to be healthier, get Americans to be healthier. If you can get that done, your healthcare spending will go down significantly. Which is why I'm going to bring up a topic which I want you guys' opinion that I am actually kind of pissed off on, that I've been seeing on Twitter. Do you know that they have a Jewish version of Coca-Cola that comes with regular cane sugar? I had no idea.
Dude, the Mexican Coca-Cola has pure cane sugar too.
I know, but it costs like 5 times more than the regular Coke does.
It comes in a 20-ounce glass bottle. 99
It comes no, but that's what I'm saying. It comes in a glass bottle. It doesn't come in a 2-liter, right?
No, it doesn't come in a 2-liter. But if you look at the regular American glass bottles that come in a 6-pack versus the Mexican one that's the 99 cents, it's not really that much of a price difference when you look at the ounces.
What I'm saying is it's kind of unfair that...
And it tastes amazing, by the way.
It does. That's what I'm saying. Why can't you give me the real sugar one, bro?
And the cane sugar is better than
it's so much better, yes.
Yeah.
No, but is it healthier? Is it healthier?
Yes. Yeah.
Okay.
Yeah.
They use this. Yeah.
I'm going to expand on what Kris said. So we could eliminate certain things on the entitlement programs by making people healthier, making the nation healthier. Get rid of high fructose corn syrup.
Yep.
That's one. Actually, go forward with some of these things Bobby Kennedy's been talking about.
Mm-hmm.
Don't allow frivolous lawsuits in healthcare. Now, obviously, if there's real malpractice, that's one thing. But if a doctor is doing their best to save your life and they can't save your life, and it's like real reasons, we bring frivolous lawsuits about so many things that bog everything down. And there's just so many things when you really start peeling back the onion on healthcare costs that don't make sense. And we really do need to overhaul our healthcare. The amount that we spend on it, you cannot tell me we cannot find a better way to do this.
Mm-hmm.
But making people healthier is critical. And also, Pepsi and Coca-Cola donate so much money to certain programs. Why soda is allowed to be part of the SNAP program is crazy.
Yeah, it's not only that.
I mean, it's just, I don't know.
I mean, it's sad because even like how we do farming, it's all like factory
why are we
farming.
spraying all of our foods with these chemicals and everything? It's look at the bread. Look at all these other things. It's funny. Chamath was on Rogan. I don't know if you can play it or not, but when he was on Rogan, he was talking about his experience in Europe and how him and his wife and his family go to Italy for a couple of weeks a year, and he eats whatever he wants out there, and he actually loses weight. Drinks wine, eats bread, pasta, gelato, but he comes back to the States and he eats and he just gains weight and he works out like a fiend now. And he's like, I feel gross. I have to eat a certain way now. Everything else, he's like, the food in Europe is so much cleaner and better. And with the people that I talk to that go overseas, they all say the same thing, that our food supply is horrible with all the additional chemicals that they're spraying on the food and all the additional ingredients that they have in everything.
Yeah, physical fitness is definitely not. I mean, look, if you look at it, the American population, 50% of the population is obese.
Yeah.
50%. That's insane. That means 1 out of every 2 people. And then if you look at all the problems that we have, you know why our death rate during COVID was so high? Because we had so many comorbidities that were associated with it. So people with diabetes, people with all sorts of different health-related issues. So then you add on another layer, it causes mass problems, you know? So this is one of the other things too. Our corporations, they take advantage of our political system, especially after Citizens United, to basically lobby. Like, did you see that video, Steve, where I don't know who it was. I think it was the American Medical Association or something, trying to fight to keep junk food on SNAP benefits in Arizona or something, where they were
they making a freedom argument, like an individualism argument?
No, they were saying that, their argument was so stupid, bro. It was, I have to find it. It's the dumbest thing. No healthcare practitioner will tell you, yeah, junk food should be on SNAP benefits.
I mean, this is what I haven't seen that, but I've heard certain things like that. Okay. The other thing is, I am certainly not at my peak physical shape at the moment. Okay. I used to be jacked, like really, really.
I've seen pictures of Steve in his 20s. He was jacked.
Like shredded, jacked, just a machine.
Although you still look jacked. I'm going to get the picture of you.
Shredded. Yeah. Shredded jack cheese.
at the same time, I don't have the time to go lift for an hour and a half, 2 hours a day. I just don't. And I will say that.
Wait, hold on. Before you continue, guys, does he look jacked here or not? Because he looks so jacked. Like and he's not smiling because I interrupted him from taking a bite out of his steak.
I was eating.
Picture. But he looks jacked. Still.
I mean, I'm not. I think it was just the way I was sitting, or maybe the way that shirt looks. Like I'm not. Like I'm really not. Like,
dude, you look swole. You look like you're gonna fuck somebody up. Like,
I don't work out. But what I was gonna say is,
there's the Shirley Temple, by the way, for those that want to.
Yeah, that's not mine. That's a Mets. Okay. So when I went and did paleo, I've never felt that good in my life. And I dropped 25 pounds in a good 3 months. And I did it super strict. I have a very big sweet tooth. And I did paleo for the past 3 days. And today I went on a little binger. But I am planning on going back on it tomorrow. And I will tell you, the way that you feel eating just super clean after 3 days is night and day. And the tremendous health benefits that I saw, paleo is the only way that I have ever felt really good with my diet. And it is just super easy to do. No calorie maximum. I eat whatever I want on paleo because it's all clean food. And I never felt better in my life. And I think I'm going to really do it and be very strict about it and try to drop 20 pounds in the next 2 months doing it.
So I'm doing a lot more cardio. I'm doing a lot more running and a lot more swimming now. So that's like the whole thing with me, going to the gym and getting back into like cardio beast mode. Like one of the great things was the Army kind of forces you every morning to just, keep at it. And then your PT is what is going to keep you in that good shape. The thing is, over time, instead of running, you're like, I'll do it tomorrow, blah, blah, blah. You leave it alone. And eventually, you become sedentary. And I feel like I really let myself be guided by other things. But now that I'm giving myself a lot more of attention now, like in terms of health. So starting to do more running, starting to do way more swimming, just get the cardio back to what I want it to be again.
Let me ask you guys a question.
Amit, I just sent you a picture. You can share that. So that's when I was jacked.
Oh, I've seen this picture before.
That's when I was jacked.
He's like busting out of his freaking suit, bro. Look at this thing.
You can't really see it from your phone. I figured you could pull it up on your computer.
Oh yeah, let me try. I can pull it up on my computer. Yeah, you can tell it is definitely a lot more swole than currently today. My question while I pull this up was going to be, here's a controversial question. All right. So do you think the billionaires that supported Trump so heavily would have voted for Kamala if they knew this is what they were going to get? Because they probably would have paid a couple more percentage points of taxes if they didn't have to deal with all this tariff volatility? Like, do you think they would have done a reversal, or how are you thinking of it?
I think it's too early to tell because we don't know what the final product is going to be. But if you have another couple weeks of this, I think the answer would be yes.
You already have a bunch of them turning. I mean, I'm not talking about like Trump Republicans. You're talking about 30, 40-year-old, like 40-year
No,
Republicans.
he's talking about like Ackman, Chamath, those guys.
No, I'm talking about more like Ken Langone, Ken Griffin.
No, Langone
you know.
would never turn. He's too hardcore.
I don't know about that, man.
Dude, I mean, like if I'm a super billionaire, again, if it works out, it works out. But I'm like, dude, I would have paid a couple $1 billion in taxes to not have to lose $40 billion of net worth, right? Or like $5 billion, whatever it is, because that's what's happening with these stock prices falling the way they are. And the uncertainty.
I should go on TRT is what I should do.
What's TRT?
Testosterone replacement therapy.
Why?
I should go on TRT and start lifting.
You know, hormones, any additional hormone, I think they add to your like cancer risk, right?
Do they? That's no good.
Yeah.
No, I mean, I know people on TRT and they feel like they're 20 again.
Yeah.
All right. So
fasting. Oh, that's a good idea, actually. Fasting helps a lot. You know?
Fasting is the biggest secret in this world around health, in my opinion.
Yeah, if you don't eat, I don't start eating until 10 or 11 in the morning.
Well, the thing is, like, if you think about how fasting works, if you fast for, especially like not like super extended period of time, but like a healthy amount, your body goes into a state of I forgot what it's called, ketosis, where now it basically starts to clean up your bad cells and everything else. So it tries to preserve the person as much as possible. So it helps a lot. Cold plunge before workout increases your testosterone naturally.
The level of evidence around cold plunges is like substantial, but it's just like it's a bitch to do a cold plunge every morning, right? Like you really got to be disciplined.
Go in and take a cold shower for 5 minutes.
That too. You could also do that as well.
But I mean, intermittent fasting is real. It works. I mean, there's something to be said about only eating for an 8-hour period and not eating after 8 p.m. at night and just doing 12 to 8 or 10 to 6.
Yeah, I agree.
But there's also something to be said about only eating red meat, eggs, chicken, and tuna.
So entitlement spending is the core thesis that you guys have on how we ultimately deal with the.
Well, that's one. The other thing is military spending. I don't think we should be spending.
Yeah, I'm
really the amount.
I'm a big supporter of America, but when Trump said he wants $1 trillion military budget, I'm like, wait a second, like shouldn't the technology be making it easier to not spend that much, but still getting way more? That's the whole point of pound here, right?
There should be a way that you can cut $100 billion from the military budget and still have a vastly superior military than everybody else.
Trump and PFX said 2 days ago said they want $1 trillion budget.
I mean,
like why? Like that's like it's aggressive. Like especially for drones and stuff. Like we don't need to spend that much money in a world in which our debt is where it is. Obviously, safety is the most important thing, but still, there has to be cuts across the board, I would imagine.
Yeah.
We need to fix the healthcare system. That's a big thing.
Yeah. And I think there's a lot of different moving parts to all this. The number one thing, though, for all of us is to figure out what the hell is going to happen with tariffs. And this will be another fun week to see if this plays out.
The Russell's in bear market territory right
Dude,
now.
should we be shorting the Russell?
No,
As
not
a
right now.
hedge?
No, the PEs on the Russell is like.
Yeah, but
Nate, you're the type of person that would go to the casino and pay don't pass a craps.
Yeah, don't do that.
No,
Don't
but
do that.
no,
Don't bet it. Don't bet against the
it's not even my theory. I heard it from someone else, because if we do get a recession, the Russell's dead. Like this is nothing.
Well, I mean,
if we get a recession, the Russell is dead, way more than the tech companies.
Well, look, small caps are going to get hit first because they don't have the balance sheets that big caps do.
That's what I'm saying. As a hedge, shorting the Russell, I don't think it's crazy if we get a recession.
Yeah, that is bad karma.
I think you're better off just going long on TLT instead of trying to short Russell.
I agree. I would never take the hedge. I just heard of the theory. I'm like, yeah, small caps would get destroyed.
See, that's one of the problems too right now. You can't even hide in TLT because TLT's been getting whacked at the same time.
Yeah.
I'll tell you what stock I'm really looking at right now. Oracle.
Why?
Yeah.
No, why? What is
Oh
something-
yeah, you say why? You probably never read their financials.
I've read some of their stuff, but what is about? You
They're-
can't tell me
they're-
Oracle has never traded on financials, so I don't know what that.
Dude, it's gone from 198 to 132 in the past month and a half.
That is exactly what has happened to Nvidia, 140 to 90. I mean, like it's not like
Oracle is trading at 16.4 times 2027 earnings with 33 with more growth than Alphabet. It is crazy. Their financials are great. Their return of capital is crazy. It's a diamond in the rough that nobody's looking at because it's not.
no. It's not a Steve. If the market pumps, Oracle probably goes up 10%. Same does Nvidia. There's no diamond in the rough anywhere right now. Everything's a diamond in the rough. Everything's fucked right now.
Okay.
Like I don't think Oracle outperforms anything. I think everything will go up or go down together.
You watch Oracle make all-time highs in the next year to year and a half.
If it does, so will Nvidia. That's what I'm saying. Like, there's
I'm not saying it's better than Nvidia. I'm just saying that it is drastically undervalued here.
So is Nvidia. I'm saying there's no diamond in the rough.
Nvidia is the best, in my opinion, bang for the buck right now. There's no question about it because of the growth rate. Now, Alphabet's probably number 2, especially with what they just rolled out.
What about PayPal? Are we not buying that at all?
Oh, that's something I was looking at. I think PayPal is very undervalued.
Yeah, especially considering they're following the AutoZone playbook and just doing massive amounts of share buybacks. I mean, in terms of raw stock price, this thing should do really, really well on an ROE basis.
I mean, it's a tobacco company right now. I mean, it's trading at 12.5 times this year's earnings. It's trading at less than 10 times forward earnings. I mean, it's a tobacco company.
Can you each give me one in the chat as well? One unconventional stock you think Buffett is like? Don't say Oxy. Don't say this. Like, what's an unconventional name you think? If you were advising Buffett, would you say, "Hey, Mr. Buffett, this is a stock you should really look at"?
Well, that's a loaded question because he has 70-something portfolio of businesses.
I get it, but I'm saying 350 billion. If he's saying, "Hey, Steve, I want to allocate,"
go buy Kinder Morgan because you already have a huge energy company. You bought 7,700 miles of natural gas pipeline from Dominion in 2020. You have tremendous energy portfolio of companies you've acquired. Go buy Kinder Morgan and connect all your assets because you know we need more natural gas. And then go buy Oxy as your upstream producer because you already own a third of the damn company.
No,
Also.
the one for upstream, I think that has the best assets. And
Diamondback is very interesting, Chris.
Well, no. So BP has a lot of Haynesville assets.
Yes.
The challenge is I have to look up how they're allocating cash because the challenge with natural gas is the break evens on dry gas. So like the break evens for like Haynesville is like $3 and
the big one's the Marcellus. The Marcellus shale is probably the biggest for nat gas.
Yeah, but the problem is it's all the way up in Pennsylvania.
It's far.
And the amount of legislation over there that's always like trying to stop these things.
That's also why Kinder Morgan makes sense because 77,000 miles of pipe.
Yeah. So my thing is right now, you're right. Natural gas pipe is probably good because if you look at the total amount of export cargoes that are going out right now, it's just, believe it or not, it's so funny. I was actually looking at this while talking to you guys right here. Look at this. This right here is the number of LNG, what is that thing called? Exports, and how much export volume that we actually have right now. And it's literally just climbing. So you're right. Kinder Morgan is probably going to do really well because they own all the infrastructure that the pipes that all that LNG is going to go towards. I was trying to figure out who owns the pipelines from Permian because Permian, they get natural. Yeah, they get natural gas as a byproduct for all the oil drilling.
I'll tell you the two. So it's you want the Permian takeaway and you want Midland. The two companies are Kinder Morgan and Energy Transfer. So go to Energy Transfer Investor Relations, go to any slide deck and go to like the second or third slide and look at their slide deck for their infrastructure and do the same thing with Kinder Morgan. Energy Transfer just acquired Enable Midstream, which is all Midlands. Their concentration there to connect all the exporting facilities terminals and storage facilities is insane.
And
It's
they also
insane.
have their own terminal, right? That they're trying
Yes,
to
they do. Yeah,
Which
bring
one's
up,
that?
Bring up Energy Transfer's asset map. I mean,
Absolutely.
them and Kinder
Charles.
Morgan should freaking merge, to be honest.
Wait,
with
but you two didn't say the most obvious stock that you should be buying. Like, obviously, he should take a stab at Palantir. It's not that crazy.
Stop it.
Right? It's
Just
not.
stop
No,
it.
but it's not. It's actually not that crazy, dude.
Stop
To
it.
say you're
Don't
like
wanna hear
the
it.
fact that you guys just ignored that completely is
I don't want to hear it.
kind of annoying.
So here's share my screen. Here's the map for Energy Transfer. So Energy Transfer
No,
owns.
that's not, Chris, that's not the right one.
No, this is the Energy Transfer, their actual footprint right now.
Oh, Hood. You should definitely be buying Hood. Buffett would love him.
Look at this. So all of the stuff, this is all Permian right here, right? Everything is gathering. It's all going here. So
Chris,
yeah, ET
you're on
is probably the best
You're on
one.
the Energy Transfer website. Do me a favor. Go,
Yeah.
because I have you guys on my phone, so I can't share my screen. Go to that button on the top of the three lines. Go to in the center, presentations and webcasts.
Okay, 1 second. Hold on.
Do the burger. The three lines is called a burger.
Yeah, on the top right.
Okay.
And then third
presentations.
column.
Yeah, I got it. I got it.
April 2025 presentation.
I'll bring it up right now.
And scroll down to nationwide footprint because it actually shows you where the terminals are.
Yeah.
This is the one I
Right
think it's a little bit better for the viewers because it gives you a little bit more information. Because those big cylinders are their terminals.
See, Palantir can create an ontology of all this shit, right? And so that's why I think.
Well, Palantir works with Kinder Morgan.
I know, that's my point.
Cushing, Lake
at
Charles.
But yeah, freaking ET is my favorite and Kinder Morgan is my second favorite right now because of their footprints. And then Enbridge is always up there.
I didn't know that they also had connections to Marcellus
The
through.
problem with ET though is it uses my phone too much.
Because
to go
it
home.
tries to phone home.
Correct. You didn't let me set up the punchline, bro. You finished it for me. That wasn't. I was gonna like.
No, I wanted to
ruin the
ruin it
whole
for you.
thing, bro. Good.
It's all fee-based revenue. Yeah, ET is definitely
Yeah, Chris, it's all fee and take or pay.
right here. And they have an LNG terminal. What's the MTPA on this thing?
I don't know off the top of my head, but this is the one. This is the biggest infrastructure in the country.
5 MTPA. Not that big.
Dude, I don't even think Buffett does as much research as you guys are doing right now. Goodness gracious.
And then,
Boring
Chris,
as
dude,
shit.
if you do
Oh,
the same
God.
thing for Kinder Morgan, I think Kinder Morgan's is going to impress you too. I'm
I'll
going to
look
their
at
site
it.
now.
In all seriousness, Buffett should be buying PayPal. It's not a dead company. The buybacks are amazing. I feel like this is the most obvious thing Buffett will get into. Like, it's weird that he hasn't yet. Or Ackman. Ackman picked Nike over PayPal. What? I don't understand that even a little bit. I get the
Yeah,
Uber.
I mean, that doesn't make sense to me, but whatever, it's their money. Chris, go to Kinder Morgan and they have an investors thing.
Mhm.
So you can share the screen. Just the
Where's
2025 annual business update. Like,
Okay.
their infrastructure is so amazing. I don't know. I get excited about this stuff. Like, this is just crazy.
No, but this is cool. This
It's
is
slide 5.
No, in all seriousness, most people don't go this deep into like these sectors, and there's a lot of outperformance to be had.
What
over the next
slide?
decade.
Right here? This one?
Slide 5.
Yeah, right here.
No, not that. Not that one. Are you on the 2025 annual business update?
Oh, it's not the annual. Look that one up. Hold on.
Yeah, no, right there, right there.
Okay, this one right here.
Yep. That and then slide 5. I'm actually really looking forward to see your reaction because I have something to say about this. Something that's unique with their footprints. Yes,
Holy
that one.
shit.
Exactly. Holy shit.
That's
And
rich.
holy shit because of something very specific. If you look at the top up in the Dakotas, they are
Mhm.
one of the only companies that has an extensive footprint up in the back end. Okay.
Yeah.
They also connect the Marcellus, Big Permian takeaway, Eagle Ford. They are also the Powder River Basin This is one of the most complete pipeline companies you can invest in.
And what's the dividend on Kinder Morgan?
4.5 to 4.8%.
They're not a partnership anymore. They're corp
they're
now.
C corp, and they've gone
Which is
from
good.
18 to 26.
Yeah.
But there are several infrastructure companies that are amazing. Kinder Morgan's one of them. Energy Transfer, Enterprise Products Partners, and Enbridge. I mean, Enbridge is the most complete because they have the largest utility company in North America in their portfolio.
Is the core argument around this industry that energy, because of AI, is going up? Like, is that why you're excited?
Well, that's a very small portion of it. The argument is this asset base cannot be replicated.
Yeah.
You cannot. So you, me, and Kris can go talk to a couple of people, Ackman and Chamath. We could talk them into giving us $1 billion to go create a SaaS company, hire engineers, and we can compete with somebody. Good luck trying to raise money to go build an energy pipeline company. Not only do you need the permits, you need the land, you need the environmental studies, you need the connectivity to the basins, the connectivity to terminals, you need the expertise. There's no new companies getting into this space because
It's an oligopoly. It's an oligopoly.
You cannot replicate this type of infrastructure because the sheer cost is incredible. Think about it like this. Warren Buffett had the political capital and he had the cash. If there was the ability to do this organically, he would have done it. He went and paid $1.4 million per mile from Dominion for 7,700 miles of natural gas pipeline because it was cheaper just to acquire it from his already set company.
Yeah.
Like, you cannot recreate this. We need energy every second of every day to run the country. The AI story is just an additional benefit on the growth story of energy. But from a stability, pipe is the cheapest and quickest way to move energy from A to B.
Okay, so let's end it off with this. Give me an unusual pick that Buffett should go with. That's still reasonable.
He would pick Hershey's.
I like that.
Why?
He would pick Hershey's.
Why?
Especially with cocoa coming down to like 8,000 something per
No, but what do you
ton or whatever it is.
What's exciting about Hershey's? Like, why would he just?
It's a consumer packaged goods business. He loves consumer packaged goods. It's stable. It's a good business.
Look at
long-term,
owns See's
everyone buys it.
Candy. It fits right in his portfolio.
Yeah.
It's in every grocery store, household name. Hershey's is the standard in chocolate. It's either better or worse than Hershey's. I mean,
and look at
something
that. It's
that's
dropped
never
off.
going to go out of style.
Damn, this thing felt bad, bro. 260 to 160. Holy
Yeah,
but
well,
you
when
gotta look
cocoa
at the price of
prices,
cocoa.
Yeah.
Go to trading
Well,
economics and look at the commodity chart. I mean, this thing skyrocketed from like
Which-
3,000 a ton to 12,000.
which, by the way, I've been literally like looking at West African weather for the last like year,
Same
hoping that there's been better weather so that this way the price of the commodity gets back to that 3,000 level. Because if you look at it, if you look at the commodity, do a 25-year chart. Do a 25-year chart, Amit, or 10-year, whatever.
Yeah, you got to go out further.
Yeah, look at that.
Look at
It's
that.
such a stable price all the way
Yeah.
until 2022.
And
then it had
because
a
of
couple of
diseases and weather.
right, and had a couple of bad seasons, and then
Yep.
this is what happened. The other thing is the damn fucking price of gold went up. So all these people in the same area, they're doing illegal gold mining too, which is like poisoning the land, which isn't helping.
Kris,
either.
Kris, given you're Indian, don't you have a ton of gold somewhere?
My mom's got like probably like at least a couple of kilos of it.
It feels like that's turning into a safety for
My wife might have not a lot. She probably has a bit. My mom definitely has a lot because she's been a gold bug forever. So my mom has a lot of diamonds too. She used to work on 42nd Street. So
Really?
in the diamond district in New York. So you ever met in diamonds, the way that it
Dude,
works?
how weird is it walking through the diamond district?
Oh, it's super weird.
It's so weird.
Why
Oh my
is it
God.
weird? Why is it weird?
I'm not
Because
even gonna
there's
tell you why it's weird. Don't tell them. I mean, just walk through there one day. You live close enough.
Indians and Jews, bro. You'll see them everywhere. Like Indians, especially like from my part of
No.
Huh?
Kris, it's weird because it's the only place you can walk through, and it's just the amount of stores with crazy amounts of jewelry, cash on hand, buying anything that comes through the doors, people outside peddling goods. It's just wild.
Yeah. So I don't know if you know this, but so the part of India I come from is called Gujarat, and that's where all the African diamonds, the rough, they all go to India, to Surat, right? And that's where they do the polishing. And then they take those diamonds and then they export them here to New York. And then New York, they do all the assortments. And then also the stores do all the stuff for like, for jewelry and stuff like that. So all the artisans and everything else. So there's this whole like economic like value chain that happens. And so my mom used to work for like a small business that did assorting. So what happens is when you get the stones, they come in and then you have to grade them. So my mom would grade them like, this is this. Like she's still right now, she'll tell you, like she could just look at a diamond and be like, yeah, this is cubic zirconium, CZ. That's what they call CZ, versus a real diamond. Like she could tell you right off just looking at it.
Yeah, I just know Indian people in general, like gold's a big thing for them. But gold also feels kind of copy.
Look at him. Look, he's got the gold ring on. He's got the gold chain.
Well, I've always I had a gold ring back in college. It was my dad's old ring, but then I lost it, and so I've always like wanted the gold ring again. So I think it's like $400 or $500. This is not crazy, but this is from my
5 ounces of silver is my paperweight.
Yeah, so there you go.
Yeah. The reason why my mom has so much gold, because someone's like, oh, gold is expensive. Yeah, it's because in India, the way that you do anything is that if you have like Indian women, if you do any like ceremonies, you transact anything, like you go to things, usually the gifts are in gold. So when my wife and me got married, people didn't just say, here's a check. People got us gold. Like they got us, different things. And my wife doesn't wear it. My mom doesn't wear it. But back in the day when my mom got married, she got a lot of gold from the wedding, and she basically is kept it. And so she's got, and it's not like bricks of gold. All right, no one has bricks of gold. I know the gold card.
This thing is up like 20% since when I got it, bro. It's legit.
I have it too. I got it too.
No, but nice. You have the real gold one, right? Is the real one?
Yeah.
So, I got an answer for you for your question. I'm just doing a calculation. I got an answer for you. You're not going to guess.
But is it a fun stock, or is it some random Seeking Alpha stock that you found?
You're not going to like it, but it makes sense.
But we need an exciting stock. Like,
how about if I told you that Buffett could pay right now $228 billion for a company that's generating $12.8 billion free cash flow and paying just under 18 times?
Wait, say that again. Say that again.
Market cap at 228.
Mm-hmm.
Free cash.
Wait, 228 billion?
Yeah.
Okay.
Free cash flow of 12.8 billion.
Okay.
Paying 17.8 times free cash flow.
Someone get the chat. I thought it was Disney, but it's not.
Dirt cheap. Disney doesn't even generate $5 billion free cash flow, I don't think. Hold on.
228 billion? That has to be a
IBM. Pumping.
IBM.
Disney is pumping. They're doing like $8 billion of free cash flow now. Look,
it's IBM. I'm right. It's IBM, right?
It's not IBM, but you're close.
Oh, Cisco. Cisco. It's Cisco.
It is Cisco Systems.
Cisco's
paying a dirt cheap valuation for a ton of free cash flow.
When have you ever known him to be in anything tech except for Apple?
No, he's not. I mean, he bought IBM and got out of it to buy Apple. And it took somebody else in Berkshire to buy Amazon.
Dude, he's not going to buy.
Like what's
the
Buffett portfolio right now? Let's take a look at people's portfolios right now, just for the fun of it.
Dude, like, Cisco is very undervalued. And I got to tell you, everybody, including myself, and I was writing about IBM, about how undervalued it was. I should have picked it up, but I didn't. IBM is this CEO has turned this company around completely. Okay, they're doing just over $12 billion in free cash flow now. They shed the legacy business. It's incredible what they've done.
I think we get the 13 Gs in another like a month, and then we'll really see if Buffett's bought anything.
Are you all looking at anything from the regional bank space? Because I'm starting to get a little bit interested in regional banks again, and maybe that's something that we should take offline. We'll take it offline. We'll talk offline about it. because I think that requires a little bit more due diligence. But I think regional banks could do really well, especially because the administration's already said that they plan on deregulating. And if more of their cash can be deployed rather than sitting in the bank as a tier, what do you call it, as reserve, then their margins should expand. Yeah. So their net interest income will go up.
I mean, I'm not afraid to say it. If you want me to say it, I'll tell you exactly what it is.
Screw it. Go for it. Say it.
Flagstar.
Flagstar?
Yeah. Because I don't know, bro. Let's deep dive into that ourselves. They have a lot of debt on that balance sheet.
I deep dived. I'm fully aware, but I'm looking at their LDR ratio, and I am not scared.
I'm trying to pull up the stock.
They have a freaking. They no longer have a positive LDR, which is very important.
This is low key a small cap, bro. 4 billion.
Yeah, the challenge with these guys though is that a lot of the balance sheet is loaded up with those what do they call the rent controlled buildings?
Yeah, you need the Fed to cut for this to work.
Yeah,
dude, if we get some cuts and this tariff shit is not that bad, 6,500 S&P doesn't sound crazy. If earnings can
Kris,
keep up.
But remember, Flagstar is a direct line to Trump. Don't forget that.
With what? Steve Mnuchin?
Yeah. Him and his whole crew that took the equity stake and they're now running the company.
So let's take a look.
New York too, right?
So let's look at this real quick. So maybe the chat can get an idea of how me and Steve actually look at certain companies and how we look at it. So these are the assets that these guys have, right? Mortgages right here, 76 billion, securities that they have. So net interest income is let's see.
Their NII was 2.15 billion for the TTM.
Huh.
But do they have a charismatic CEO?
I don't care about a charismatic CEO. What I care about is that they have 75.87 billion in deposits on the balance sheet and only 67 billion in loans. They're under a 1 ratio for their LDR. They used to be over 1. They've shedded certain things. They have a huge residential, and I mean huge residential servicing component, which is going to explode when the Fed starts cutting because the housing market will be unlocked. To me, this is risky. This is at a price point that looks dirt cheap for a reason. If the Fed does not cut or does not cut quick enough, this won't work. But if they do, they are going to seriously benefit from refining and deals opening up.
Yeah. This is the challenge that you run into, which is if you look at the multifamily loans that it has, it's got a lot of multifamily loans in New York with rent controlled buildings.
Yes.
So the challenge is with New York is that you can't raise rents above a certain threshold every year. And that's based on the guidelines of New York State. So a lot of these buildings are in disrepair. I don't know how these things can get marked, like mark to market on these things is very difficult to figure out like what the value is. Like technically, these are really, really valuable assets if they actually ever get liquidated, right?
Oh, Kris, Citi upgraded Flagstar. Price target now 15 from 13.50. Interesting.
God damn it, man. I'll have to research it more.
And 11% short interest.
Really? They're shorting this thing?
11% short interest. And Kris, can I let you in on a little secret?
Sure, what's up?
Not going to be a secret after I say it, but stock price right now per share, $9.94. You know I like buying things under book value, right?
It's under book. Yeah, but the problem is you don't know what the real book value is because you can't value the assets.
Forget book value. Tangible book value per share is $17.29.
Ooh!
So even if they're wrong, let's just say tangible book's 14. Okay? You're still making 40% on this when this runs.
And what's the catalyst? Like the rate cut?
I think rate cuts is going to be a catalyst for the sector, and this will be something that becomes rising tide lifts all ships. And I think because it's short, it will get pumped. And I don't think that the investment narrative around the financials is as doom and gloom as it once was, because they've done a lot of work over the past several quarters to really change certain things in the financials.
Wait, what happened last year? Like, why did they? What happened to the narrative, which is what caused it to tank last year?
Part of it was the LDR ratio. You remember they got caught in a liquid crunch because they took on Chris. What was it? That wasn't Key Corp. What company was it? They were forced to take on assets from one of the failing banks during
New York
regional
Community
banking
Bank.
crisis.
New York Community
Well,
Bank.
New York
NYCB,
Community
correct.
Bank and Flagstar merged. They changed the name to Flagstar International, but they took on assets from another company. I mean, they've had to do some cleanup work, but
Wait,
it's
you're
a
right.
different story.
NYCB is not public anymore. So
No, it's Flagstar. Them and Flagstar merged.
Now I get why Mnuchin has, because when you guys were talking about Mnuchin, I thought he bought shares in New York City Bank, New York Community Bank.
They took over the entity and they changed the name. So Flagstar was the mortgage, nationwide mortgage center. NYCB was the regional bank center.
Ah, makes sense. Makes sense. This is kind of reminding a little bit of TFC, right, Chris? In terms of just
TFC's undervalued.
No. TFC is way more.
But
TFC
it's a
doesn't
much
have as many
different
TFC doesn't have as many toxic assets as this thing does. This thing has toxic assets, and you can see right here in this chart right here. Well, not chart, but this.
I mean, remember in 2023 they finished the year with 84 billion in loans. Right now they only have 67 billion. So I mean, they've been shedding the book quite a bit to right size things.
Yeah, they have interest rate sensitivity, which means that if interest rates go up, they're going to get absolutely slaughtered. If interest rates go down, they'll do well. So it's all an interest rate thing. So that's why the market is
dividend now.
Yeah,
are they exposed to commercial real estate at all?
Yes.
Okay.
Not crazy, but they are. But you got to remember, what Chris is talking about is technically commercial real estate.
That's fair. Yeah.
So it may not have the office exposure, but it does have a lot of commercial real estate exposure.
So commercial real estate is not just office. I think a lot of people get that confused. It's also multifamily. One of the things. Do you know who Ben Mala is?
Yes.
Yes.
Yeah. So he was talking about this too. Like a lot of debt is rolling over, and a lot of buildings that have been built over the last 5 years, they're sitting at much lower. They're sitting at much higher vacancy levels, and they're not cash flowing right now. So he's like salivating for these things to go into
So you
sales.
can
So
buy
he
them
can
at
buy
auction,
them.
pennies on the dollar.
Yeah.
Remember 2023, there was supposed to be a massive commercial banking crisis.
Yeah, but then the Fed came in and did something called a BTFP, if you remember. So,
right. You're right.
You know, the bank term funding program, where basically you were able to take your loans, even if they were underwater, and get dollar for dollar, and that staved off the banking crisis. Otherwise, you would have had multiple regional banks failing right now.
Dude, I think J-Pow's done an incredible job.
Yeah. J Powell did a great job and basically kept things okay. The challenge that you're running into right now is just the policy measures that are in place are cause a lot of uncertainty. So any sort of stability in policy will ease the markets and soothe the markets into people allocating more capital into the markets again. So this theoretically, when it comes down to it, you don't lose money when VIX is like 40, 50 and you buy shit.
Yeah.
Yep. Because over time, things are going to get better. The only thing is you don't know what the actual bottom is going to be and what the recovery timeline is going to be. You could be buying into the first 6 months of 2008 right now, or you could be buying into the tail end of whatever we had in 2023. You don't know. That's the challenge with this whole thing right now.
Yeah, that is fair. I think that this year has not gone the way a lot of people thought it would go.
It's only the first 4 months.
It's only Q1.
Yeah, but in general, I don't think anyone expected this type of volatility. But it's still recovered. It's not like it's September. Like we have a chance.
This is nothing that can't be undone at this point.
Yeah, this is a man-made. I'm going to say this one last time. This is a man-made problem, which means it can be fixed by man-made, right? Man-made solutions. So I think Trump
2 to 3
has
weeks is a lot different than 2 to 3 months. We cannot have this for 2 or 3 months. We can have it for 2 or 3 weeks.
if this goes on past June, then we got a serious problem because then it's going to end up being a recession that ends up staying with us until like we end up having a major crisis. But until
and I
then,
doubt that happens only because you hand the other side the keys to the kingdom at that point.
Yeah.
And I don't think that they're going to risk that.
Yeah.
Dude, if we get a democratic socialist revolution led by AOC and Bernie because the system collapsed, I mean, it would be quite interesting to see populism go the other direction.
I'm taking all my money out of the market for democratic socialist. Fuck that bullshit. At that point, I might as well start putting my money in some weird stuff, man. I'm not going to put my money.
It depends who is at the helm. And
I'm telling you, they're going to go with Bernie. Who like Newsom's? No one cares.
They're not going with Bernie and AOC.
I've got some crowd sizes to show you that says
they're not going with Bernie and AOC. If they went with somebody like Dean Phillips and some other people,
Josh Shapiro,
wicked smart,
dude,
you would have a thriving market.
If Trump has a good 4 years, they'll go with one of the puppets you guys mentioned, Josh Shapiro. But if Trump has a kind of a crappy, turbulent term, they have to go.
No, they don't. Remember, 4 years is a long time. Bernie's not going to be in any shape to run it.
Bernie's living forever. Okay, that's established at this point.
How old is Bernie? I don't even know how old he is.
I don't know. But the point is, economic distress leads to populism. This is the reason Trump got elected in 2016. I could see people going to the left and saying, you know what, screw these guys. Like, give me my money, start printing cash, send it out to me.
Can we start electing someone who's not collecting Social Security? Like, for God's sakes, these geriatrics, bro. Like, let's stop electing them. You know? Let's start electing fucking 40, 50-year-olds that still have to deal with the consequences of their actions.
Bernie Sanders is 84 years old. He's not running for president.
Yeah. Dude's going to be
he was born
what, 88?
41.
Why is he doing all these 20,000 people?
It's probably his last hurrah. Look, the guy's 84. He's not going to run for president in 2028 because think about it. At that time, he'll be 88. So you're telling me from 88 to 92, he's going to serve as commander in chief? That's not happening.
If he gets a chance, come on, bro.
He had a chance. He had two. He tried 2 times.
He got fucked by the Democrats when
he couldn't get the nod. I'm telling you, it's not going to be Bernie and AOC.
He's going to Coachella. You're telling me he's not trying to run for president? Well, he's at Coachella.
It could be. They may be crazy enough to put Elizabeth Warren and AOC up there. They're not going to put Sanders up there. It's just an age thing at this point.
I think
I hate saying that.
Kamala's trying to go again. I think Cory Booker's trying to run.
Look, I'll tell you, it's going to be interesting to see what happens in the primaries because I hope Dean Phillips really throws his hat in. I like Dean Phillips a lot.
I think if Trump has a good 4 years, JD Vance is set up to keep going. But if it's not the best 4 years, it's going to be.
I mean, my prediction on that is it's going to be Vance Tulsi 2028.
Ooh,
Vance who?
Tulsi Gabbard.
Tulsi, really?
Yeah, Vance Tulsi.
All right, we'll see.
Well, it's not going to be Vivek. I think that comment he made about Americans are lazy.
It's not. He's done.
I think that ruined his career, bro. Like, you can't say it just like JD Vance. Like, you can't say certain things that way. And he wrote an essay about why Americans are lazy, and I'm like, you didn't have to say it like that, you know.
I mean, you may see something like Bloomberg, Shapiro. Bloomberg's the same age as Bernie, maybe not. But I'm telling you, Dean Phillips and Shapiro, watch them make some splashes. I'm serious. People don't even realize who Dean Phillips is.
No, you know who it's going to be, though? Like, I think if we were a betting man and you really didn't want to lose your money, I think it's obviously going to be Newsom. Like, pretty obvious.
I think right now it looks like he's a shoo-in.
Yeah.
Who?
Newsom.
You think Newsom's going to win?
No. I think he's going to win the primary, yeah.
He has a very good chance of doing well in the primaries.
Dude, he literally started a podcast. He's adjusting his views to try to appear to be more center. Like, he's not as uptight about the whole trans stuff. He's talking to Steve Bannon. Like, you're getting a lot of pushback from Democrats to him. I think he's trying to appeal to the independents. What other Democratic
senators throws their hat in the ring? I mean, I think you're going to see a big wide variety of people running, it's going to be very interesting. I'm actually looking forward to see on both sides. I think the primaries are going to be very interesting on both sides. It's going to be really interesting to watch.
What about Jamie Dimon?
I don't think he's going to run.
Why?
Nah, he's not.
I just don't think so.
Because he sees all the stress that you have to go through to deal with all this BS, man.
That's fair.
I mean, I wouldn't be surprised if Stephen A. Smith throws his hat in.
Dude, can we stop? Like,
I'm not saying that I would support it. I'm just saying I wouldn't be surprised.
He is obviously liking the fact that his name is in the headlines, and which is why he's not saying no, right? He loves this.
Don't be surprised if Andrew Yang tries to make a comeback.
Yang, I don't see that. But Stephen A. Smith, look, he just got a 5-year, $100 million deal. I really don't think he wants to worry about Iran nuclear weapons. He wants to worry about LeBron versus Jordan. But he loves this so much. And I think, would he run for a little bit just to keep building his brand? Yeah,
Maybe.
I think he would.
Maybe. Look, Buttigieg will probably end up running. I think Elizabeth Warren will give it another shot. Kamala will give it another shot. I think it's going to be really interesting to see what happens. And then on the Republican side, I mean, there's probably going to be a wide people trying to run on that.
Stephen A. would crush in debates. He knows how to debate. If he was educated about the topics, which I don't know if he is, I've never heard him politically, but I think he could crush any Democrat.
Something he can learn.
You could learn it pretty easily. Yeah, that's fair.
Something he could learn. He's a smart guy.
Mark Cuban, I think.
Cuban's not going to run.
Yeah. Nope.
What if Biden runs again, dude? That would be.
Biden.
If
Biden's still alive.
give it another trial.
If Biden's still alive.
Yeah, I mean, obviously a lot of them are getting older right now. I think the idea that Kamala wouldn't run again is not easy to say. I think there's like
I think that she would throw her hat in the ring. Why wouldn't she? What does she have to lose? I mean, she obviously has support.
What about Clinton? What if they run her again?
Not going to happen.
Why? Why wouldn't they?
She's old
too much reputational damage. I just don't see it happening. I think Kamala has a very good shot. Look, she's going to learn from her mistakes. She's not going to listen to the people that she listened to this time around, and she's actually going to do things differently. I think she would have a very good chance.
I don't think she would have a good chance, but I could see.
I don't think so. I don't think so.
Listen, it depends who you're running against. Trump got every swing state. I don't know that happens again on the Republican side.
If we get a recession, no. If we have a good 4 years, I think.
Remember, Trump had a lot of things going into this that really helped it. So,
no, but that's what I think people are pissed. Trump basically got a bull market given to him with inflation coming down. He was about to have an epic 2025, much less 4 years, and then this whole tariff thing changed everything. But he basically was handed ChatGPT exploding, NVIDIA exploding. Literally, inflation was at 2.4% in September. I mean, what more could you have asked for, bro? Bitcoin at 100K? Like, what more could you have asked for?
We'll see. I think it's going to be, the political landscape is going to be very interesting.
He's got to break something to fix it. Is that your logic, Amit?
I don't know. I mean, I'm giving him the benefit of the doubt and saying that he has to go through that to get to newer highs. And
Amit, I will make you a bet right now that the Democratic ticket is not going to be Sanders AOC.
I wouldn't take the bet because I agree. I agree with you. But I think if we have a recession, people will go to the left.
I'm not disagreeing with you on that. I agree 100% that will happen.
If people really get screwed, they will go to the extremes of anything. That's what happened in 2016.
I don't know about extremes. Though people that voted right would probably vote left. I just don't think it's going to be AOC Sanders left.
Yeah.
I think a moderate left ticket could win.
Dude, I think politics is always like we got a couple years of Biden not saying anything, right? And there was no headlines. Everything was chill. I think for the next 2 decades, it's just going to be headline after headline after headline. We're never gonna have a president that like stays calm or doesn't do a media appearance every other day, like unless we elect someone, who just doesn't care. But
I saw an interesting stat that Trump has answered more questions in the first 3 weeks or whatever than Biden did in his entire presidency. I don't know if it's true or not. I saw it come through before.
I think it's true, 100%. He did a press conference at 2 a.m. last night on Air Force One for 3 minutes.
You know,
with his
I was
granddaughter.
reading something that Dana White was talking about Trump's diet, how it's McDonald's, Milky Ways, and Diet Coke. He's like, I have no idea how this guy eats what he does, but the guy has unlimited energy. It's incredible.
It's the same thing with what's his name, bro? Like Buffett.
Buffett,
dude,
yeah.
just
Right. How do these guys eat like that? Like it's amazing.
Yeah.
I mean, Buffett still drinks all these Coca-Colas and eats Sears candy and Dairy Queen. I mean, there was a story that he was at some conference in New York and he had his driver drive to Jersey to get him Dairy Queen.
There's a Dairy Queen near my house. There's not that many of them, but
so I asked like what do you call it? One of my grandfathers. Technically he's not my grandfather because he's like my mom's uncle. And one of the things to long life and longevity is consistency in everything that you do and not being stressed out. So if you do something, just do it consistently over a long period of time, and then also at the same time just like don't stress about things. The less stress you take on, the more likely it is that all the what are they called, like all the like negative receptors and negative hormones, they won't start impacting you negatively. It doesn't mean that you won't have a problem. It's just means that you have less of a chance.
makes sense. If Buffett's been eating McDonald's every day for the past 40 years, like it's not like it's going to change now, and he's survived, so it gives him less stress. All right, it's 11 p.m. I think we ended out here. Yeah, thank you everybody for joining. I'll be live from the market open tomorrow. Steve and Chris's Twitter I'll put in the chat. Futures are green, which is very nice to see. This week will probably be a crazy week, just like last week.
It would have been more green to tweet anything, bro. NASDAQ would have ripped like even more, like maybe like 3 or 4%.
And can we get a congratulations for Rory Ahmet?
Dude, I don't know what the Masters is. I don't know who Rory is. I was so confused the whole day seeing this shit. Like, I have no idea what this stuff is. But congrats to Rory for.
Congrats to
winning.
Rory.
Congrats.
All right.
Later, guys.
Cool. There we go. Thank you, everybody. We'll be live tomorrow on the market open. And thank you, Steve and Chris. See you guys tomorrow morning.
Later, guys.
Bye, everyone.